네, 2021
Welcome to Global ETP Conference Seoul 2021. I'd like to thank all the participants for joining us today. My name is Kim Kyung-mi, today's MC. Today's conference is hosted by Korea Exchange and sponsored by Samsung Asset Management, Mirae Asset, and S&P Dow Jones Indices, as well as domestic and overseas ETF and ETN issuers and related organizations. Last year's conference was cancelled due to the pandemic, but this year the conference has been put together, which I think is really meaningful. We have on-site participants as well as others joining us online, and the event is being live streamed on the ETP official website and on YouTube. Indeed, we have a quite number of audience this morning, and we also have the speakers and panelists from overseas who are joining us through the online platforms despite the time difference. Thank you very much. It is unfortunate that we have invited only a limited number of participants on site, including leaders from the ETF, ETN issuers, and index providers, institutional investors, and the overall ETP industry. I am sure we will have discussions full of insight on the topic of the conference, which is the new wave of market innovation, strategies for the post-COVID investment landscape. I hope that you will actively engage in today's discussions. First of all, I'd like to invite Chairman Son Byung-do from Korea Exchange for your opening remarks. Please welcome him with a big round of applause.
Good morning. My name is Son Byung-do, the Chairman and CEO of Korea Exchange. I would like to welcome everyone to 2021 Global ETP Conference Seoul. I would also like to say hello to our international speakers who will be giving the lecture online. And I would also like to, of course, say hello to everyone who is participating in through YouTube. Where do you think there's most innovation taking place within the capital market? I believe it's the ETP market, because most of the new products do come from the ETP market. And I think it's very meaningful that we are able to have at this conference to discuss the present, and the future of ETP market, which is the icon of innovation of the capital market. I would like to thank Standing Commissioner Park Jung-un of the Financial Services Commission, as well as the presenters and discussants today. ETP products are very popular within Korea as well as internationally. Global ETP market total NAV increased from $4 trillion of 2018 to $9 trillion now. That's a twofold increase. The global fund or global capital is coming to the ETP market, which is attractive in terms of investment. ETF market here in Korea has been growing very continuously. We have over 500 listed listings, and the total NAV has increased from 41 trillion won of 2018 to now 68 trillion won. And the daily trading value is about 3 trillion won, which makes it third largest market following the US and China. And we do have, however, a few challenges that we need to overcome in order to ensure that we have truly substantive growth. We have to diversify the market ecosystem, which is focused on a few popular listings. We do have over 500 listed products, but it seems that most of the interest is focused on high-risk products such as leverage and inverse products. ETF's strength is that it enables the distributed investment. Also, it's a mid-risk and mid-profit product. And so we need to make sure that these strengths of ETP is well utilized in the market. And we also need to provide education for the retail investors. And ETP products are, some of them are very complex in terms of the structure. Therefore, we need to provide education in order to protect the investors. And we also need to promote ETP market. And I think we need to look at our marketing strategy within the ETP so that we will be able to be competitive in the global market. And Korea Korean ETP market is now not just a player within the Asian market, but a global market. And we do have a few plans in order to make sure that we have innovations. We will provide diverse products in order to satisfy the investor needs. We will provide future industry thematic ETFs such as Metaverse and electric vehicle. We will also be issuing or launching overseas equity ETFs to active ETFs. And we are also developing new types of products such as the fixed income ETFs with the maturity. We are going to also strengthen our protection of the investors. Derivative products such as leverage and inverse products, there needs to be a clear understanding about the risk. And we are going to provide more customized education and training to the ETP investors online and offline. And we will also try to promote the brand value of the Korean ETP market. We will use diverse marketing channels such as YouTube so that the excellence of the ETP products can be more promoted more widely. And I believe the Global ETP conference that we have been holding since 2010 has been contributing to the enhanced status of the market. And we will work closely with the asset managers in order to ensure that our market is better known in the market. And I'm sure that the ETP market is going to continue to grow. Steve Jobs said that innovation is what distinguishes between a leader and a follower. And here it says innovation distinguishes between a leader and a follower. And our ETP market has been continuously growing and has been providing a new vitality into the capital market. And through continuous innovation, I hope that our ETP market will continue to grow and become a leader in the global market. I want to thank the asset managers, securities companies, as well as people from the relevant organization for all their support. And the weather has gotten really cold. Suddenly, I hope that you will keep healthy. Thank you very much.
그래서 손병
That was Chairman and CEO Son Byung-do of Korea Exchange. So we are seeing a lot of innovation in the ETP market indeed. I hope that the Korean domestic ETP market will lead the global ETP market. Next, I would like to invite Standing Commissioner Park Jung-hoon from Financial Services Commission for a congratulatory remark. Please welcome him with a big round of applause.
네, 안녕하십니까.
Good morning. I'm Park Jung-hoon, Standing Commissioner from the Financial Services Commission. First of all, I'd like to thank Chairman Son Byung-do as well as the participants for being here with us today. It is my great pleasure to be part of this meaningful gathering where we have discussions on the ETF and ETN. I'd like to also thank the representatives from securities-related organizations, asset management companies, security firms, index providers, and institutional investors for participating today. For the past 2 years, we have experienced a lot of changes, and the investment paradigm of the asset management market gone through a lot of changes. The market liquidity or volatility is even greater, and the market liquidity has increased remarkably. And we are also seeing investors choosing more of direct investment rather than indirect investment, as well as transition from conventional mutual funds to ELS and ETFs. And there are a lot of interest in new investment vehicles, all of which means there is already growing competition among investment vehicles. As you all understand, the domestic investors have been making significant investments in ETPs, which have become one of the major and efficient asset management tools. Since the first ETF was launched in 2002 in Korea, the Korean ETF market has grown into global top 10 with AUM of 65 trillion won and 500 or so listings. It is low cost, it's also transparent, and it is meeting the investment needs of Korean general public. For ETNs, the market was opened in 2014 and it continues to grow with AUM of 8 trillion won and approximately 200 listings. I think all these achievements were possible because of your dedication and passion. The domestic ETF and ETN markets have grown in size. Now it is time for us to have discussions on how to further sophisticate the markets, especially in terms of quality. First, we need to have more vibrant active ETFs. Active ETFs have advantages of ETFs. It's low cost, transparent, and convenient, and investors can also seek additional return. Last year, Active Equity ETF was launched, and we are seeing various types of products. However, in terms of the number of listings and AUM, it accounts for only 6% of the total ETF market. The financial authority is closely monitoring the growth of the active ETF market, and we want to make sure that there are various active ETF offerings by making revisions to the existing institutions. We also believe that ETPs can be an important tool to ensure after-retirement income for the general public. We are seeing increasing ETF investment in pension accounts. Pension accounts investment in ETF can help save tax, and it is also an efficient way of investment, and we expect increased amount of investment of this kind going forward. These investments have long-term horizon with demand for diversified asset allocation. That's why we need to develop various ETP products. We need to secure new growth engines for the domestic ETP markets so they will have natural investment amount flow into the capital market. I think we are at a critical time that we need to come up with ETP products that we can develop to meet these needs of the investors. And I think it is very meaningful that we are gathered here for this conference where we have discussions for the present and future of the ETP products at home and abroad. It is also critical that we also have in-depth discussions on consumer protection. I hope that the domestic ETP market will become a truly global market. And to that end, the government will work with the financial industry. Thank you very much for your listening.
Yes, thank you. That was a standing commissioner Power. He congratulated us on successful opening of the conference, and he also mentioned the meaning and the significance of the theme of the conference. Now we're going to watch a performance. The ETP market here in Korea has been growing steadily despite the pandemic. And that is because of the strong support that we've had from the industry as well as the relevant organizations. So in order to celebrate them, we have prepared this performance.
네, 여러분.
Thank you very much. And once again, please give the performers a big round of applause. So it was a performance that represents the successful opening of the conference, and it also represents our collective wish for the further advancement of the capital market. It was really dynamic, as our capital markets are also dynamic. Now we're going to have a time for a group photo with the VIPs. The VIPs, please follow the guide of our staff members to come up to the stage for the group photo session.
네, 저희는 이 사진 촬영 이후에 쉬는 시간 없이
We're going to move right into the first session after the group photo without any breaks.
네, 지금 다소 조금 불편한 상황임에도 불구하고 본
Once again, thank you very much for participating in today's global ETP conference show despite the ongoing pandemic, where we have to withstand some inconveniences. We've worked really hard to create a meaningful conference this year, and the VIPs are now taking a group photo. During the conference, please cover your mouth and nose at all times with the mask. So we're going to take the group photo. Please face the camera. Maybe we'll try a different pose. We will take another shot. I'd like to ask the speakers and panel discussants as well, and would like to also have the speakers who are joining us online. So we see all of you from the screen. So we have everyone on stage.
Thank you. 자, so please raise your right hand, right fist like this, and 1, 2, 3. Then we say fighting, which is the very popular cheers in Korea. 1, 2, 3, fighting. 네, 해외 연사분들도 같은 포즈로 이렇게 응해.
So it is also good to have the online participants be included in the group photo.
네, 대단히 감사합니다.
Thank you very much. So this year's conference is taking place both online and offline. And this is for the online participants. Again, we have on-site participants and online participants. And for those of you who are joining us online, we have some events. So if you capture the live streaming screen and visit our website to participate in the event, we will select some of you. So if you upload the pictures, we'll select some of you and send out free coffee vouchers. There is online exhibition going on alongside the conference, and the online exhibition is organized by KRX, and there are also online exhibitions organized by other asset management companies. So you can visit the booth, and you can also receive information on the products, and you can also get real-time counseling. And for the participants, we will select some of you and give out Paris Baguette gift certificate, and there will be a one winner of hotel voucher. So make sure that you visit the online exhibition as well. So please visit our official website. There is online exhibitions going on, and you can also download the slide decks of the presenters. And you can also leave your comments about today's conference as well as the online exhibition, and we will also select some of you to give out some gifts. Now we are going to begin the session number 1 of today's conference. We have 3 sessions today and have 6 presenters. After session number 2 and session number 3, we will have a panel discussion session, respectively. And you will have a chance to ask your questions to the speakers and panelists. And maybe you want to write down your questions during the presentations. I think the stage is ready. Now we are going to begin the session number 1 of today's conference. The topic of session number 1 is Korean and Global ETP Market Trend. I'd like to introduce to you the first presenter. It is Mr. Song Young-hoon, Executive Director of Korea Exchange. He's going to give a talk on the topic of overview and initiatives of the Korean ETP market. Please welcome Mr. Song with a big round of applause.
네, 발표 너무나 기대가.
We look very much forward to his presentation. Ladies and gentlemen, please welcome Mr. Song.
이게 마이크가
I wonder if the microphone is working or not. Is it working? Well, good morning. My name is Song Young-hoon. I'm an executive director at Korea Exchange. I will be making the first presentation in the first session. As the MC has said, I will be talking about the overview and initiatives of the Korean ETP market. I will also cover some of the performances of the Korean ETP market last year and this year. So let's first look at the market overview. And before I talk about the market current status, I think it's important that we look at the history of the ETP market here in Korea. Well, with the KOSPI 200, ETF was first listed in 2002. So that was the beginning of ETF market in Korea. And in 2007, International Equity ETF was listed. Then in 2009, Inverse ETF. And in 2010, Leverage ETF were listed. In 2015, Inverse 2X ETF was launched. So it's not just the pure ETF products, but also two plus and minus of derivative ETF products were launched. And ET was first launched in 2014. And in 2017, fixed income active ETF was launched. And in 2020, we have launched active equity ETF. And so the ETP market here in KRX, we have all the indices or the international products, as well as the leverage and inverse products, as well as the ETN products from the security houses. And we have active as well as passive ETF products. So we do have a very diverse lineup of products available within a Korea Exchange. And let's first look at the ETF market. And as for AUM and in the number of listings, you see there have been significant growth in terms of AUM. It used to be around 50 trillion won. And this year, the number increased dramatically to 63 trillion won. And for the first time this year, the number of listings went beyond 500. And in terms of trading value, there is also dramatic improvement or increase. In terms of ADTV, it was around 1 trillion won. However, after the pandemic, the number increased to 3 trillion won. And so, of course, the fact that the stock market trading volume increase has contributed to increase in ETFs, but also thematic ETFs and active ETFs and other new products have helped to increase in the trading of the ETFs and in Korea. And if you look at globally, in terms of AUM, Korea is about 11th largest market. And in terms of number of listed products, we are number 7. And in terms of trading value, we are number 3. So globally, Korean ETF market is a market that you cannot easily dismiss. And as for types of ETF products, and in terms of AUM, domestic ETF account for around 80% of the total AUM, and plain vanilla products account for almost 90% of the products. And the market representative indices product make up about 50%, and the sector product 22%, and the fixed income account for about 16% of the market. That is in terms of AUM. And what's interesting is that in the past 2 years, sector products has increased significantly. Sector AUM was up in 2 years ago was about 3%, around 3%. But as of September this year, that number increased dramatically to 22%. And in terms of trading value, domestic products account for about 87%, and the plain vanilla products are about 54%, and the leverage products and inverse products make up the remainder. As our CEO has said in his opening remarks, the leverage products and inverse products, well, in terms of the AUM, they are quite small, but in terms of trading value, they are quite large. And with the launch of diverse products recently, the ratio of the leverage and the inverse products in the total market has decreased. That is relatively decreased. And as for the so-called market representative products, they account for about 63% of the trading value, and the sector products account for about 18% of the trading value. And with the sector products, in terms of trading value, it only accounted for 1.1%. But that number, as you can see here, increased dramatically to 18.9%. So in terms of diversity and the composition of the products, you do see we believe that this is an improvement. And about investors. If you look at the KOSPI market on the right-hand side, where retail investors is about 61%. But in the ETF market, retail investors only account for about 47%. However, foreign investors and institutional investors account for a large portion. In particular, LP investors account for 12%. So in the ETF market, the LPs are quite important. And about new listings of ETFs. In the sector ETFs, there have been quite a lot of new listings. About 2 years ago, there were about 4 new listings. Last year, there were 20. And up until September this year, about 26 new listings of a sector ETF. And equity type sector ETF were launched quite a lot, and they were, of course, listed in the market. And so, as I said, there is an increase in the sector ETFs. And you see more dramatic story with the active ETF. Last year, 5, and this year, there's 20 of them. And as for the international ETFs, you do see a constant or continuous increase. In 2019, there were 13, last year 18, and this year, as of September, there are 25. So in terms of new listings, or you see what the market is going to be like. Sectors, international listings, and the active ETFs are likely to continue to increase. And related to pension accounts, as you know, well, pension accounts have benefits in terms of income deduction and tax deferrals. And there are also benefits of ETF compared to the over-the-counter products. It's quite easy to access such a product, and there's also high transparency. And also, there's a very diversified portfolio, which means that it's possible to reduce risks. So those are the benefits of ETF. So if you combine the benefits of pension account and the benefits of ETF, well, that is going to, of course, that has of course brought about a significant shift in the Korean market. So the balance of ETF in the pension account, it was only about 470 billion won about 2 years ago. But as of this year, that is June, it's about 4.5 trillion won. That is a tenfold increase. And the retirement pensions were usually trust products or were with the banks. But now many of these accounts now include ETF products that have been provided by the security houses. And let us now look at ETN. The indicative values. So this is similar to AUM of the ETF, but total IVs this year has reached 8 trillion won, and the number of ETN listings is more than 200. Well, ETF has, as I said, market has grown significantly, and also ETN market has grown quite impressively. And in terms of trading values, since the start of pandemic, the values of trading of the ETN has also increased significantly. And as for the product types, IVs, in terms of IV, this is a bit different from ETF. For IV, domestic only accounts for about 30%, international about 70%, and compared to the plain vanilla products, you see there are more leveraged and inverse products. And you see there's more a commodity than equity. And that is because ETN targets niche markets, markets that have not been targeted by the ETF. That is why we have more international products, and as well as leveraged and inverse products and commodity products for ETNs. And in terms of trading value, international account for about 70%, and leverage and inverse products account for about 80%, and commodity accounts for 50% of the trading values of ETN. And ETN allows investors to seek a profit from international products and also seek alpha from a non-plain vanilla product. That's what ETNs do for investors. And let's look at investor composition. Let's compare ETN and ETF. You see a retail investor portion, not much difference between the two. And for ETF, there's about 25% of foreign investors, but ETN, there's almost no international investors. And institutional investors account for about 45%, and most of the institutional investors are LPs. And so in the ETF market, you see the two main players are institutional investors and retail investors. Ultimate consumer is retail investors. However, institutions provide a liquidity into the market so that the market can be sustained. Now, I'd like to look at key performances in 2020 and 2021. Last year, because of the pandemic, there was a lot of changes and shifts in the market. Related to oil, ETN leverage, the disparity ratio was really large, and there was a lot of speculative investment. And last May, the government and Korea Exchange conducted a joint review and announced measures improve the ETP markets. And ETN, we were able to reduce the ETN price. And so the disparity ratio was at one time increased to like 800 to 900. And so we focused on controlling disparate ratio. And we have decided to designate certain listings as items to be cautious about, and as well for the minimum holding of the constituents. So we have made those mandatory. And in order to suppress a speculative investment, and for the leverage and inverse products, we have started providing education as well as the minimum deposits. And in the ETN, there have been launches the following and the major indices. So we do have about 10 KOSPI 200 ETN products launched. And so thanks to these efforts, leverage ETF volume they accounted for like 60% previously, but the number has been able to be reduced to about 36%. And I believe that the disparate ratio has also been normalized. And as for the active equity ETF, this has been garnering a lot of attention. There is about 17 of them in Korea, and AUM is about 647 billion won, and ADTV is about 11.4 billion won. And so I think that the launch of active equity ETFs in Korea has been very successful given these numbers. And there are new players joining the market, such as the time folio assets. And for the players that have been strong in the over-the-counter products are now entering into the active ETF market. And there is also expansion of the product lineups. There are the sector and thematic ETFs for the secondary batteries and the EVs, the Metaverse have been launched into the market. And a self-indexing product has also been launched into the market. And related to the product lineup, because there is a demand for international products. That is why there has been more international ETF products introduced into the Korean market. So the international ETF AUM in 2019 was about 7.2%. That number increased to 21.6%. And we have also launched ESG-related products. I think I've spent the time that's already been given to me, so I will try to hurry, and I will talk about the KRX's initiatives. We'll try to revise regulations on active ETFs. And what's most important here is the correlation coefficient related requirement. For a passive, it's about 0.9, and active, it's 0.07. 0.7, excuse me. And this 0.7 from a manager's point of view it's not an easy number to satisfy. And if a manager maintains goes below this number for 3 consecutive months, their product will be delisted. So they have to think about this coefficient requirement. But if you have a high coefficient requirement, it would be very difficult to create a profit. And so we are thinking about revising the regulation so that the correlation coefficient requirement would be below 0.7. And for the requirement of the number being maintained for 3 consecutive months, we are thinking about changing to 6 consecutive months. And so we are going to change the regulations so that the managers will be able to create profits. And we about the PDF, transparent, excuse me, non-transparent or semi-transparent ETFs. Well, we are thinking about introducing them. And we are also looking into active ETF that does not have the correlation efficient requirement. However, these non-correlated active ETFs and the non-transparent or the semi-transparent ETFs, well, there are difficulties in terms of hedgings by the LPs as well as the participation by the AEPs. So we will think about these things as we think about launching these sort of products. And also for the target maturity bond ETF, we are going to allow for such this type of product to be launched. But as you know, insurance companies and they want target maturity products. So in order to satisfy such a demand, we are going to allow for the introduction of target maturity bond ETF. And related to the mixed asset ETFs, or if you have the stock and bond ETFs, well, you have to have at least 10 equity items or 10 fixed income items. And so it's not easy to compose an ETF. And in terms of reach, we do not have all that many listings. And so for the mixed asset ETPs, we are going to make it so that it can be a total, constituent of 10, but including equities, fixed incomes, and reach. And investors or the retail investors are the ultimate consumers. So we are going to continue to provide education for these investors. Our ETP market has grown in terms of quantity, but we are going to make efforts so that the market will also grow in terms of quality. Thank you for your attention.
저희가
We are going to take one question from the floor. So if you have any questions about the presentation, please raise your hand. Due to time constraint, we're going to take only one question from the audience.
안녕하세요.
Good morning. Good morning. I'm Seo Kyung-gyu from Korea Economic Daily. Thank you for the presentation. Well, asset managers have been wanting to launch 3x leverage products. I understand in the US there is also 3x leverage as well as inverse products. So is there a plan for the KRX to introduce 3x products? Well, that's something that's been discussed in Korea for several years. Well, as of now, we do not have any immediate plans for such products. Well, we did have a lot of volatility last year. And the leverage and inverse products, they already take off a large portion of the trading volume already. And for us to introduce 3x products at this point, I do not believe that's appropriate. But we have to think about competition with other markets because Korean capital is flowing into the international market. So that is why we are thinking about introducing new products. However, we have to provide a safety mechanism if we're going to provide a 3x product. So if we do have the safety net prepared, then maybe we may introduce such a product. But let me just say that for now, we are not thinking about introducing 3x products.
여기까지만 받고 이 시간
So with that, I would like to conclude the first presentation. Let's give Mr. Song a round of applause, please.
드릴 첫 번째
So that was the first presentation of session number 1. We listened to a presentation on the overview and initiatives of the Korean ETP market. I'm sure there are a lot of participants have concerns or interests on what's going to happen in the market after COVID-19 pandemic is over. Now let us move on to the next presentation. We are going to have discussions on the global ETP market, and the next presenter is Mr. John Davis, Managing Director of the Global and Global Head of ETP from the S&P Dow Jones Indices. He's going to talk about the latest global ETF market update. Unfortunately, he couldn't join us live and instead has provided pre-recorded video of his presentation.
It's a pleasure to be with you again, albeit in very different circumstances. We at S&P Dow Jones Indices are not only proud of our partnership with the KRX dating back to 2008, but also of our continued collaboration with our many clients locally as we have strived to develop and support the local market appetite for index-based investment products and solutions. I'm with you this morning to give you an update on the global ETP market, and I know I have a short time, so I just want to give you some observations on how the global ETF market has evolved and some retrospective thoughts, as it's been 2 years since I was able to be physically with you on stage to present at the 2019 KRX conference. So if we look at the last 10 years, we see a global compound annual growth rate of 18% and year to date 9%. And I've been privileged to present at this event since 2013. And in those intervening 8 years, we've seen asset growth of nearly 4 times and product offerings double to a level of over $9.2 trillion and over 9,000 products available to investors, which is actually phenomenal growth in those short years that we've been looking at the markets. If we actually look at the global markets by region and where the products are listed, it shouldn't come as a surprise to see that US listings are at the top with 71% of total market listings. Europe is second with 16%, and the Asia Pacific region with over 10%. Which is leading both Canada and Latin America, which are growing markets for exchange traded funds. If we look at the breakdown of the global market by asset class, the picture really hasn't changed in the last few years. Equity products lead the way with 76% of the market, but fixed income has now climbed to over 18%, largely due to the recent and ongoing central bank intervention with quantitative easing and much more greater interest in fixed income investing. If we drill down into the asset class growth, again, from the perspective of when I first talked to you back in 2013, we've seen equity allocations grow by nearly 4 times. Fixed income has actually grown 5 times. And even though commodities have been in a decade-long decline, the assets under management in commodity products has actually increased 2.5 times. Interestingly, in the last few years, we've seen a lot of high-profile active ETFs coming to the market, with a lot of traditional active managers now converting their active mutual funds into exchange-traded products. However, the assets involved in those products still only account for around 4.4% of the total market. Similarly, if you look at the inverse and leverage product space, whilst there's increased interest in several local markets, Korea being one of them, the overall asset allocation to inverse and leverage products from a total market perspective is only just over 1.2%. I think that what's interesting now, if we look at flows, this year is on course to be a record year. 2021 has seen huge flows into the total market. And if we look at the equity perspective, year to date, there's over $882 billion of new money that's flown into the total market, and of which equities accounts for about $632 billion. Which, when you compare to the last record year, which was in 2017, the total year was only $462 billion. So the rate of new money going into the total market and equities in particular is far exceeding the last record year. And even if you look at fixed income, this year we're currently at around $211 billion of new money going into fixed income products, which is almost at the same record level of last year, $264 billion. And if you look at a lot of the media coverage in recent months, a lot of commentators are predicting that this year we could actually see the first year of $1 trillion of new money flowing into exchange traded products. And what's incredible about that observation is that it took almost 20 years for the first $1 trillion to be invested in global exchange traded products. So we could actually see 20 years worth of growth actually happen in 1 year in 2021. Okay, if we take a look at who are the major players globally in the exchange traded product market, again, this table hasn't changed much over the last few years. BlackRock are still number one with over $3 trillion now under management in exchange traded products with a third of the market share. Vanguard are number two with over $2 trillion, and State Street at number three with over $1 trillion. And again, if you look at the actual flows on the right-hand side for the year-to-date 2021, again, it's BlackRock, Vanguard, and State Street who are taking the lion's share of new money globally. But what's interesting is that if you look at all of the top 20 issuers, all of them are positive for new money inflows into exchange traded products this year. And that's probably the first time we've seen that for quite a long time. Okay, if we now move on to looking at who are the global index providers in the exchange traded product market. And again, for those of you who've seen me present previously, you would remember that I always say that this is my favorite slide. And the reason is fairly obvious because S&P Dow Jones is number one as the index provider in the exchange traded product market. And we currently are providing indices for $2.5 trillion of the market, which gives us a market share of around 27%, which is more than our two major competitors, MSCI and FTSE Russell, put together. Now, that's a very privileged position to be in, but it's also a challenging position because it means that we have to continually innovate with new products and also work very collaboratively with all of our partners to ensure that we are bringing the right products to market to support the end investors' requirements and needs in this market. Okay, if we now turn to look at the local market specifically, again, Korea now has over $54 billion of assets in over 500 products, which again, since I started presenting at this conference back in 2013, we've seen the equity allocations increase almost by 3 times and fixed income by the same amount in terms of relative growth. What's interesting is that if you look at the 10-year compound annual growth rate for the Korean market, it's around 25%, which is way above the global rate of growth. And again, year to date, the growth rate for asset growth in the local market is around 16%, which again is way above the global market growth. And if we then turn to look at the flows for the local market, and again, from the total level and looking at equities and fixed income, we're seeing that it's on course to be the best year since the last record year for the local market, which is in 2018. And again, if we look at who the major local players are, again, Samsung and Mirai lead the charge at the top of the table, with Samsung 44% of the market share and Mirai at 33%. However, they're now being chased by KB Asset Management, Korea Investment Management, Hanwha, and Kiwoom and NH. So the market is becoming very competitive and is growing at a very healthy rate. And again, if we look at who are the index providers that are active in the local space, obviously KRX are the dominant provider. And we're proud to be partners with the KRX, and we continue to work with the KRX and local providers to help bring choice to the local market. Now, I just want to share this slide with you because this is a slide that I actually had in my presentation 2 years ago. And when I presented this slide 2 years ago, I talked about the growth of the global markets since its inception in 1993. And as I said then, it took 19 years for the first $1 trillion to be invested. As I mentioned previously, we could actually see $1 trillion of new money in 1 year alone in 2021. But the growth rate has increased year on year because it only took 3.5 years for the second $1 trillion to be invested, 2.5 years for the third trillion, and 1.5 years for the fourth trillion, and then it was just another year for the fifth trillion. And at the time, now bear in mind this was 2 years ago, I referenced a McKinsey and a PwC global report, which were written in 2011, and they were estimating that the global ETF market would reach $6 trillion. And that was actually beaten by 2019. And then I referenced this Morningstar chart underneath the growth rate chart, where they were estimating that the market could get as high as $14 trillion by 2025. But I think what's really interesting is if you look at where we currently stand right now, before we even get to the end of 2021, we're actually 2 years ahead of schedule on the Morningstar forecast at over $9.2 trillion. And this is phenomenal growth. And it just goes to show that the move from active to passive, which we've been witnessing for the last 20, 30 years, is still a strong movement. And we're seeing more and more assets move from active products to passive products. And these growth charts are, quite frankly, out of date because the pace of growth is incredible, and we are going to see record levels of investments in exchange traded products this year and for the foreseeable future. And one of the reasons that we see this growth, and again, this is another slide that I shared 2 years ago, because 2 years ago I highlighted a couple of areas where we thought that the next level of growth is going to come from. And and I highlighted 3 areas in particular, and one was ESG, and looking at environmental, social, and governance, and looking at the Sustainable Development Goals. We're also looking at new technologies with blockchain and cryptocurrencies, and then looking at AI and innovation for next generation of products. So that was 2 years ago that I highlighted these areas. And what we've actually seen in the intervening 2 years is a huge amount of new product come to market in all 3 of these areas. And and it's no coincidence that this week was COP26 in Edinburgh, where all the major global leaders, government leaders, have come together to talk about climate change. And we've seen in the last few years a huge amount of product development, not only in the general ESG space, but in climate in particular. And S&P Dow Jones has been very committed to developing new index products for that climate transition to the 1.5 degree strategies that the governments are looking to implement. And so you've seen huge amounts of new product come to market in that space. And we're now seeing a lot of assets not only transfer from traditional products into new ESG and climate related products, but brand new investments going into those products as well. Similarly, in the thematic space, we've seen a huge amount of new product utilizing artificial intelligence and looking at the fourth industrial revolution of new sectors, looking at robotics, looking at healthcare, and obviously the last couple of years, healthcare has been top of mind for everybody as we've all gone through a huge change in our lives, both personally and professionally. And again, a lot of investments gone into these new areas. And obviously from the technology perspective, blockchain really is a a huge factor in developing new products. And on the back of that, we've seen just recently, the launch of Bitcoin products in the US, after we've seen them in Europe and in Canada. But obviously the recent US launch has been very high profile, with over $1 billion going into the new products in the US. So again, whilst I highlighted these areas 2 years ago, those parts of the market have grown hugely in those 2 years. So the real question now is, what's going to be the next drivers of growth for the next few years, right? Obviously, these products are going to continue to grow, but I think the challenge for all of us in the passive space is to continue to innovate and continue to collaborate to bring new products to market. And obviously, S&P Dow Jones, it takes on that challenge and is continually looking to innovate with new products. And so I look forward to speaking to you, hopefully in person in 2022, and talk about the latest developments of the global ETF market. Thank you very much.
네, 내년은 직접
So we do hope that we'll be able to engage with you next year in person. So that was John Davis from S&P Dow Jones Indices. So we listened to 2 presentations of session number 1. Before we move on to the next session, we are going to have a short break for about 5 minutes.
So we'll now begin session number 2. And the theme of the session is the recent approach to ETF investing. And in this session, we will be looking at investment and trading trends in the ETF market. We have two speakers in the session. They'll be joining us via Zoom. And our first speaker is Mr. Dan Lefkovich of Morningstar. He's going to talk to us about the thematic investing, peril, and promises. And he is currently working as the strategist and indexes of Morningstar. So is he connected?
Yes, I am. Can you hear me?
Yes, very well. Thank you very much for joining us. Please begin your presentation.
Very good. Anasayo, thank you so much for having me this morning. I wish I could attend in person, maybe next year. I hope you're having a good morning. It's evening here in Chicago. But in any case, the topic that I'll be presenting on today, thematic investing, was mentioned by the last speaker as one of the major growth drivers in the global ETF market. You can infer by the title of my presentation, Thematic Investing, Peril and Promise, that we see both potential for success as well as some peril or danger in thematic investing. Although I'm presenting today from the perspective of an index provider from Morningstar Indexes, our research team has done a lot of work on thematic investments globally, and I'll be sharing some observations and the data that they aggregate and that I'll present to you makes us take a cautious approach to thematic investing. So first of all, just to define terms, I think we all know what we mean when we talk about thematic investing, but a thematic investment, essentially from our perspective, is one that is organized according to some sort of macro trend or structural driver. It might be economic, it might be political, it might be technological, it might be demographic, but it's not organized in a traditional way according to asset class like stocks or bonds, or region or investment style like growth or value, or factor or market capitalization. Examples of themes: artificial intelligence, robotics, space, renewable energy, urbanization or smart cities, esports. And you can see that these have a lot of intuitive appeal to investors. They're things that people are hearing about, they're reading about on a daily basis, and they resonate in a way for investors that a factor strategy like momentum or low volatility doesn't. A thematic investment is often a very good story. The question is it a good investment? So our research team has gone through our global database of 50,000 mutual funds and ETFs domiciled all over the world. And we've identified about 1,300 that we tag as being thematic in nature. Thematic investing is much more popular on the equity side than the bond side. So these are all equity funds that I'm showing you here. We've seen very, very dramatic growth in the assets of thematic investments globally. As the last speaker said, it's been one of the huge success stories in the ETF market. And I don't think it is a coincidence that thematic investing grew massively during the pandemic. We saw a lot of long-running trends, a lot of long-running themes accelerated during the pandemic as we all had to work from home and learn from home and shop from home. You saw cloud computing and mobile payments and e-commerce and all sorts of themes just experience 3, 5, 7 years of growth in the space of a single year. The markets were also very, very strong globally after that downturn in the first quarter of 2020. And I'll speak a little bit about the relationship between performance and thematic investing. But you can see that we track about 600 billion US dollars in thematic ETFs and mutual funds globally. These are active and passive. As I mentioned, they're retail funds. So these do not include institutional capital. This does not include structured products, guaranteed notes. So there's probably even more capital in thematic investments globally. Europe is the leading region for thematic investments, although this includes the cross-border domiciles like Luxembourg and Dublin, which distribute funds all over the world, including in Asia and the Middle East and in Latin America as well. You can see there was a lot of inflows, a lot of capital coming into thematic investments recently. And the US is still a little bit behind Europe, but the US very, very strong. This is an area where active ETFs have had a lot of penetration in the US market. You might have heard of ARK Invest. Those are actively managed equity ETFs that are thematic in nature. Cathie Wood has become somewhat of the face of thematic investing in the US market, certainly in recent years. We've observed a strong correlation between equity market performance and the launch of thematic investments. So you can see thematic investments, fund launches have been very strong recently. They were also very strong in the late 1990s, in the era of the technology, media, and telecom bubble, the early days of the internet and mobile telecommunications. Thematic investing was also very popular in 2007, 2008, before the global financial crisis. We saw a lot of thematic investments launched around the commodity supercycle and China's growth and emerging markets, consumer demand, luxury goods demand. This was the era of the brick investments. Now, if we go back even further to the 1960s, there was a huge boom in thematic investments focused on electronics related companies. Any company that had a Tron or a Tronics in its name was getting a lot of inflows, just like .com became very popular in the late 90s. In the 1980s, there was a big thematic investment boom in biotech and in companies that were exposed to middle-class consumer demand. So we see that in many ways, thematic investing, at least the launches of funds, are somewhat of a bull market phenomenon. They correlate with equity market performance. Now, I mentioned that we're cautious, that we take a skeptical approach in general to thematic investing. And the reason is that we think that investors have to get a lot of things right. You have to be successful on a number of different levels in order to succeed with a thematic investment. In horse racing, they call getting 3 bets right trifecta. So we think that you have to get a trifecta bet correct in order to be successful with a thematic investment. First of all, the theme has to materialize as anticipated, and they don't always. Some themes have just not grown, like virtual reality is one, or 3D printing. These probably have not grown to the extent that they were maybe originally anticipated. Second of all, you have to identify companies that are benefiting from the theme, that are exposed to the theme. And then third, those companies have to be good investments, right? Their security prices have to appreciate. The market can't be pricing in too much growth already. And you know, the late 1990s, the internet era, is really a perfect example of why all 3 of these themes are really critical. So obviously, the internet and mobile communications was an extremely important theme that was completely transformative. It's impossible now to imagine living and working in the age before the internet, before mobile telecommunications. Of course, some of us did, some of us remember, and some of us did. But just because that theme was very powerful and did end up being extremely successful and correct, that didn't make the companies at the time profitable. At the time, most companies had not really figured out a business model to take advantage of the internet and mobile communications. And then, of course, the share prices at the time were in bubble territory, and they were reflecting unrealistic expectations. So the bubble burst, and even though the theme ended up being correct, the internet was not a very good investment in 1999. It has been over the past 10 years, but not at that time. So the timing has to be right. You know, if you think about Amazon.com, Amazon was a company, was a public company in the late 1990s. It traded about $94 per share at the peak of the bubble in 1999. When the bubble burst, the price dropped precipitously, and it took until 2009 for Amazon's share price to recover. And very few investors really stuck with Amazon from 1999 to 2009, right? Most investors left the internet and were going on to brick, going on to the commodity super cycle. So thematic investing, the timing has to be right. You have to be able to identify good companies. A good story and a good theme is not always a good investment. Now, that's not just in theory. The data, I think, support our observation that thematic investing is difficult and it's hard to be successful. So you can see that in over shorter time periods, the thematic investments that we track in our database, the funds and ETFs, tend to outperform over short periods. But as you go into longer time periods, the success rate diminishes. So over 15 years, only about 20% of thematic investments outperform their peer groups, and the majority of them actually close or liquidate. So the fund or the ETF closes down because it has not attracted enough assets, or because the performance hasn't been good, or usually a combination of those two things. So 20% is, it's difficult. So 80% or so of thematic investments over 15-year time periods do not succeed, according to Morningstar data. Now, given that data, given that observation, we take a very, very cautious approach on the index side at Morningstar when we decide whether to build a thematic index. So some of you might be familiar with our index capability. We've been designing indices for about 20 years now. We have about 126 ETFs and other investment products that track Morningstar indices, including several ETFs that are listed on the KRX. And our specialty is really taking Morningstar's data, Morningstar's research, and creating index solutions that can provide benchmarks, that can underpin investment products. We do this with investment style. We do it with equity research, which I'll get into in a minute. We do it with environmental, social, and governance data and research through Morningstar's Sustainalytics subsidiary, which focuses on ESG, and we do it on private market investing through our subsidiary called PitchBook. When it comes to thematic investing, we're very privileged to be able to draw from the expertise of our equity research team. So we have about 100 equity analysts globally covering 1,500 stocks. So if you can do the math, that's about an average of 15 stocks per analyst. So they're able to go very in-depth on the companies that they cover, understand the competitive positioning of each company, the dynamics within the industry, and all of our analysts use a single methodology, a consistent approach to forecast the cash flows of the companies that they cover, which makes their estimates consistent and comparable across region, across economic sector. We cover about half of the coverage is in the US and half of the coverage is outside of the US. We cover companies across market capitalizations and across economic sectors as well. And I mentioned we have that PitchBook subsidiary that focuses on analyzing private companies. So we're increasingly using their research to continue coverage when a private company goes public, and also just to understand the competitive dynamics in particular industries. So I'm going to talk a I'll just briefly go into a couple case studies of thematic indices that we've created and how they utilize our equity research. So our flagship thematic index is called Exponential Technologies. We launched this one in 2014, so it goes back to several years ago before the big boom in thematic investing. This is actually tracked by an ETF in Korea on the KRX, and it has been investable in Korea for some time now. But this is a multi-thematic index that includes traditional technology-related themes like big data and networks. It includes healthcare-related themes. It includes industrial technologies like robotics and 3D printing. It includes the energy transition, financial technology. The themes themselves are not super unique. I think you've seen other thematic investments that provide exposure to these themes. But what makes this index unique is how we identify the companies that are included in the index. And with any thematic investment, it's crucial to understand the methodology. How are securities being selected? How is a basket being assembled that's going to deliver a good investor experience? A lot of investors just see the theme, it resonates with them, and they stop there. But it's really important to understand what's going on, how is the investment being structured. So we use our analyst team to identify companies, and that's unique because a lot of thematic indices on the market, they use something automated. They might use percentage of revenue, looking for companies that have a particular revenue percentage exposure to a theme, which is fine, but it's looking at historical information. It's not looking to the future. It's not looking for companies' potential to benefit from themes. Other thematic indices in the market use keywords or text searching. They look in regulatory filings for mentions of a particular theme. That can be a little bit problematic as well. We've actually heard of some cases of companies inserting theme-related keywords or text into their regulatory filings because they want to be noticed by thematic investors. I've heard this referred to as innovation washing, in the same way that greenwashing is pretending that you're more sustainable than you are. Innovation washing can be pretending to be more innovative or thematically exposed than you are. So we use our analysts to identify companies that they think in the future will drive material net profit increase as a result of their exposure to themes. And we think it's really, really critical when it comes to a thematic investment to be expansive as possible, to cast your net as widely as possible across region, across sector, across market capitalization, and also across what we call the thematic value chain. And I think this is a really important point, is that sometimes the innovator is not necessarily the economic beneficiary of a particular theme. Sometimes it's a company that's using a particular technology or benefiting somehow indirectly as a supplier. And you think about the metaphor of the gold rush. In the 19th century, gold was discovered in California. People from all over the United States and all over the world went to California to try to mine gold and find gold and get rich. And very, very few people got rich striking gold. The ones who really benefited economically were the ones who were supplying tools to the miners, picks and shovels, we call them. Or supplying blue jeans. That's how Levi Strauss got its start. Or supplying alcohol to the miners. So we like to look for companies that are benefiting indirectly as suppliers of picks and shovels to innovators. So here, just to take an example, within the energy and environmental systems theme, some of the big beneficiaries of the electric vehicle transition are lithium miners. So we have a lithium miner, which is actually in the basic materials sector in our technology index. We have in the 3D printing Stryker, which is a maker of medical devices, which is using 3D printing technology to make artificial hips and other medical devices. So sometimes using the technology or supplying the technology. Seagate Technologies is another example. They're benefiting from the demand for increased storage space by connectivity. Another example of a thematic index that we've created more recently, and this one is more focused, it's just a single theme, global infrastructure and connectivity. So we all know that hyperconnectivity is critical these days, and we all want to be connected all of the time. We're experiencing the 5G revolution. We all want to be on the cloud. Now, you see a lot of thematic investments focused on the cloud, or sorry, on 5G that have a lot of telecom exposure. Our index actually has no telecom exposure because we think that the telecom providers, even though most consumers access 5G through the telecom providers, most telecom providers are not benefiting economically. They just have to have 5G because everyone else does. It's just table stakes, as we call it in gambling, right? It's just to keep up with the competition. And actually, it's quite costly to upgrade your network from 4G to 5G. But there are other classes of companies that are benefiting from the 5G revolution. One example is semiconductor providers. So they're enabling the technology. And these companies, include Qorvo and Infineon and Monolithic Power Systems. And then you have infrastructure as a service provider. So you've heard of software as a service. Well, infrastructure as a service is sort of a similar idea. These are companies that make servers and switches, and they provide storage and network access. They're often little known companies. Datadog is one example, Arista Networks. But service is a very good business. It's recurring revenue streams. It tends to be very sticky. The retention rates are high. And here I'm also showing you a scoring framework that our analysts use. When you have 100 analysts scoring companies and there's qualitative judgment, you need to have a rigorous system that's going to ensure consistency and depth, right? So we have a decision tree. The analysts have to ask, will the company, they have to answer the question, will the company drive material net profit increase over 5 years as a result of their exposure to a particular theme? So this is a forward-looking judgment, right? It's not based on historical annual reports. It's not based on keywords. The next decision, what percentage of revenue? Every company gets a score, and then based on the score, you get into the index or you don't. So with that, I'll conclude just as a takeaway, good stories are not always good investments. A thematic investment has to succeed on those 3 levels in order to deliver a positive investor experience. And then it's critical to go beyond just what the theme is and understand, okay, how are companies identified that are exposed to the theme, and do your due diligence, because the biggest economic beneficiaries of themes are often not the innovator. They're often benefiting in an indirect way, as I mentioned, as a supplier of picks and shovels. So I will stop there, and hopefully I've left a little bit of time for questions.
Okay, thank you very much. 여러분 박수 부탁드리겠습니다. So we're going to have a time for a question and answer. Due to time concern, we have just one question from the floor here on site. So for those of you who have any question, please raise your hand. 네, 질문 있으시면 손 들어주시기 바랍니다.
If you have questions, please raise your hand and we'll bring a microphone over to you. You can also ask your question in Korean, and your question will be interpreted into English for our speaker. Well, it seems there are no questions.
Any question here? Once again, thank you very much, Mr. Dan Nekpovitz, for the great presentation. 네, 이렇게 해서 세션 2의 첫 번째 연설을 만나보셨습니다.
Now let us move on to the next presentation. Again, we're going to have the presenter joining us from overseas. The next presenter is Mr. Curtis Tai, Head of Institutional Sales and Trading Asia Pacific from Jane Street. One of the success factors of ETF is the high liquidity, and he's going to talk about the institutional trading, which provides liquidity to the ETF market. So again, Mr. Tai is the head of institutional sales and trading in Asia Pacific from Jane Street, Hong Kong Limited. He's going to recent approach of ETF investing, and we listened to 2 presentations. We are having this conference under the theme of the new wave of market innovation. We were not able to organize the conference last year, but we have put together this year's event with online and offline participants. So we have participants both online and offline from the early morning. A lot of people are joining us online, listening to the presentations. I also checked the YouTube channel. I was able to see a lot of audience posting their comments, and there were people saying that it was really good to listen to presentations on the most up-to-date industrial trends. The conference is being live streamed, and you can also get credit for your participation. And 1.5 credit will be acknowledged for those people who are taking this conference. So you have to get certificate of participation for your participation for the conference and get 1.5 credit. There is an also online event going on. If you visit our official website, you can visit the online exhibitions that are going on. You can also leave your comments about today's conference. You can also download the presenter slide decks. Now the stage is set for the panel discussion. We're going to have discussions on the ESG investment. We have experts invited as panel discussants. We are going to have in-depth discussions on the ESG investment, which is growing in its popularity. Now I'd like to invite the moderator and the panel discussants onto the stage. The moderator is Mr. Kim Bam-sung, head of Korea S&P Dow Jones Indices. Please welcome him with a big hand. We have Mr. Kim Tae-woo, Vice President of MSCI. We also have discussants joining us online. We have Charlene Law, Head of Strategic Partners of ETP from Contigo, Jeremy Zhou, Head of Index Solutions from FactSet, and Ivan Ong, Managing Director from FTSE Russell. So, Mr. Kim Bam-sung, you can now lead the panel discussion session.
I'm Kim from S&P Dow Jones Seoul. It is very grateful to moderate this panel session. We will talk about the era of ESG investment. With the ESG experts around here. Surely it's a phenomenon that many investors are talking about ESG and ESG product and some thought on the ESG investment assessment, things like that. I believe the CAREX picked up this agenda for reflecting these type of trends. The ESG-related ETP AUM is now quite sizable, like more than 300 billion US dollars as of this year, August. And also more than 100 billion US dollars is inflowed the ESG ETP up to August this year. To discuss about this type of movement, I would like to introduce 4 panelists to audience. Please introduce yourself with your name and role, region in charge. Shall we start from Mr. Kim, and then Jeremy, Evan, and then Charlene, please.
안녕하십니까.
Good morning. My name is Kim Tae-woo, working at MSCI Seoul office. Well, we provide do index, ESG, and index and real estate. So we do 4 businesses. And in case of ESG, well, MSC has the largest number of clients around the world, and we have 73% of the global market when it comes to ESG ETFs. And we also assess about over 10,000 companies. And so that is when it comes to ESG. So we do the largest number of ESG assessment around the world. And in Seoul office, we provide ESG research and ESG indices to Korean pension plans and large financial companies. And I'm responsible for the business development related to ESG and ESG indices.
Jeremy?
Hi, everybody. Good morning. My name is Jeremy, and I work for FactSet. We are a global data and analytics company, which includes a lot of ESG data as well. In terms of ESG, there's a lot of ESG data. So, Sustainalytics, which is from our partner at Morning. Many of these data you can find on FactSet. And we also have our own data, which is called True Value Lab. So in our index solution, which we build a lot of indices, especially thematic index and some ESG index data. And I'm in charge of the whole market. So we do a lot of business in Asia as well. And we are beginning to do more business in Korea. Thanks.
Evan, please.
Good morning, everyone. So my name is Evan Ong. So I look after the exchange-traded products business in APAC for FTSE Russell. So FTSE Russell is actually a truly multi-asset index provider. So we provide, obviously our index offerings for both the fixed income and equity side of the index solutions business across the board. And I think, when it comes to ESG, one point of notice is that FTSE Russell is part of the London Stock Exchange Group. And as many of you are aware that, the London Stock Exchange recently acquired Refinitiv. So now we have a holistic data set for ESG and across the board for, I think, which is very topical right now, what everyone mentioned was the thematic side as well. So not only are we multi-asset, but we also have the data capabilities internally that are able to, customize a lot of the index solutions, both ESG and thematics, for a lot of the issuers across the board in Asia and hopefully more so in the Korean market as well. Thank you.
Charlene, please.
안녕하세요. Good morning, everybody. My name is Charlene Low. I'm the head of strategic partnerships and exchange traded products for the Asia Pacific region, and I'm based in Hong Kong. Very honored to be with all of you today. So Contigo, you may know us by our 3 brand names, that is Axioma, Stocks, and DAX. We essentially are a company to partner with our clients to help them to construct better bespoke portfolios so that we can help you optimize your performance as well as to manage your risk budget. So we do so by using analytical tools and indices to help build these strategies for you. Maybe in Korea, you are familiar with us because we have our Euro Stocks 50 ETFs listed there. You have quite a few variations of them, from dividends to market cap to leverage versions. They're all managed by Mirai and KB. Well, in Contigo, we currently have over 200 ETFs around the world. One interesting thing to note is ESG is our fastest growing segment, growing at about 177%. So I'm looking forward to sharing some of our learning experience with you later today.
Thank you all. I got a question to Jeremy at the FactSet. I think there are the different type of ESG assessment or ratings. In the S&P perspective, we are sending out a questionnaire to the client. We've got some answers from the client. It's kind of a survey the approach, but I think that approach would not apply to other index provider or ESG rating companies. But what about your kind of ESG ratings methodology and also index methodology as well? Would you introduce your firm's methodology to the audience?
Sure. So as I mentioned earlier, FactSet deals with a lot of third-party ESG data because we redistribute data to our clients. So we actually see a trend in terms of ESG data in the way that they're being produced. So in earlier form, like surveys is very popular, and then more recently, as companies begin to disclose more of ESG data via their annual reports and corporate social responsibility report, many ESG data provider begins to capture and analyze these ESG data from the companies. But then I think in the last 5 or 6 years, we begin to see a new sort of ESG data that does not rely on what the company disclose. And mainly, I think that is one way to avoid what people today call greenwashing. So a lot of companies, when they are talking about their ESG behaviors or practices, they may or may not want to tell the whole story, or they subconsciously just want to focus on their good ESG practices. So in the last 5 years, what we're seeing is a trend of companies using like AI, machine learning, natural language processing, NLP technology to look at all the information that are being disclosed outside of the companies, right? So from social media, from news, from NGO reports. So from a lot of these third-party non-company disclosed media, they were able to extract information that relates to different ESG topics, and then begin to construct topics, then sum it up to a score. We're seeing a lot of these different approaches, and oftentimes for some of the institutional clients, they actually prefer to take multiple data sets from facts to construct their indexes, ESG indexes or ESG analytics.
Yes, thank you. Yeah, it might be true. We should use a lot of third-party data as well as other reference information as well. 그러면 김태우
Now I'd like to turn to Mr. Kim Tae from MSCI.
국내에서
So you are working here in Korea. So the ESG ETF partners here in Korea, the institutional investors, what are they looking at? So what are they interested in? Well, thank you for the question. Well, in case of MSCI, we have 3 passive ETFs and 1 active ETF. So total Korean equity ESG ETFs are listed in Korea, and they are following the Korean MSCI ESG index. So as a foreign index provider, it's not easy to have 4 ETFs listed here in Korea. That means that MSCI is respected and preferred by many Korean companies. Well, MSCI is very famous as an index provider, and MSCI's ESG assessments or rating are well trusted. And that is why many ETF issuers are choosing our ESG indexes. Our ESG index, this follows MSCI index and MSCI ESG index or rating, excuse me. And so we have a lot of investment from institutional investors, from pension funds, as well as from securities companies, they are using our ESG indexes for their ETFs. And one of the most prominent trends in Korea is this. After the pandemic, there's been a lot of interest in ESG. And in 2021, well, climate change has been particularly popular. And with COP26, I believe beginning next year, there's financial in the financial industry. There is going to be more investment in the technologies or the policies related to climate change. And the Korea Exchange, using our climate change related data, has announced climate change related of index. So there is a lot of interest here in Korea.
The next would be Ivan. I foresee that there are some type of criticism on ESG ratings and investment. So, for instance, like we've got the greenwashing issue and we cannot exactly match that between performance and ESG scores, things like that. But investor might have the different type of concern on that issue. So, would you elaborate on that questions?
Bomsok, if I understand correctly, your question is, I think, does performance matter, and with the element of greenwashing as well. So I'll talk about performance first. So absolutely, from an index provider's point of view, and from an issuer and investor's point of view, both retail and also the institutions, performance does absolutely matter. But what is performance? I think it's ultimately having the issuer and the investors redefine what their goals are. So, when you're looking at ESG and SI, green, climate, low carbon, net zero, or whatever aspects of ESG that, the investors are looking at, it's all about the visibility in achieving their ESG or SI targets. And that holistically forms part of the performance, overall. So it's not just purely a numbers game anymore in terms of, the percentage returns per annum, but it's more so in terms of, the overall achievement and direction of the product that they're trying to obtain. So I think that in one aspect is very important. Now, the aspects of greenwashing, I think Jeremy touched on that and some individuals touched on that as well earlier on. Greenwashing has been very topical because the authorities have been fairly vocal about this, especially in the Asia region as well. What we are seeing is that the authorities locally here, have been, I guess, instrumental in putting out guidelines and ensuring that the full disclosures are there and ensuring, the proper criteria when it comes to making sure that, what the product or what the end investment is ultimately in terms of reporting for ESG is what it makes it out to be. And I think it's a step in the right direction. And ultimately, with the growth of ESG and the maturity of ESG in this region and both globally, what we will see is a global standard, and this aspect will run its own course. Thank you.
Thank you. The next question to the Charlene at the Quantico. In terms of ETF investor, by institutions or retailers or by region, that the type of ESG investment might be different, and also their appetite, the product, the demand could be different. What do you think of that aspect, and also how do you think the ESG product will be evolving in the future?
Sure. So let us share some observations. One of the reasons why investment or approaches in ESG have been quite different across the region, partly also a lot of it is driven by regulation, but the other area is driven by investors' demand. So it could be from asset owners, from public pension, from retail. But one observation that we have made, which is quite interesting, is the old approach to ESG has largely been around maybe exclusion or maybe tilting towards ESG. But one thing, if all of us notice today when we talk about ESG, one pillar tend to stand quite significant across with the others, and that's around the environmental pillar. Perhaps that's because of the recent conclusion of COP26. So top of the mind of everybody is climate change, for example. So maybe let me just share some of the trends that we have seen in the Europe region. So in Europe region, climate change has been very important to investors. But one thing to note is our thinking around climate change or the way we invest has been normally based on backward-looking data. What I mean is that when you look at companies, you look at what their carbon emissions are. Perhaps you also look at their carbon target. But as investors, you know that we all look not towards the past performance of the company, but we're really investing in the future performance of this company. So the market demand or requires a way to capture forward-looking metric with regards to climate change. So imagine if today you're able to look at a company and you can see the impact on their cash flow when they move from a business as usual environment to a Paris Agreement. So some of these things, the trend that is driving the market is very much dependent on the kind of data that is available in the market, and where index providers can come together and use this data to create meaningful indices, construct meaningful portfolios, so that you as an investor will be able to access these and quantify that. Maybe if I can share one example around climate change is Willis Towers Watson's. Perhaps you guys know them as consultants to the world's largest asset owner. But on top of that, we found they have developed a very systematic way, bottom-up analysis of company by company, where they actually look at how these companies will perform if the world moves to a 1.5-degree environment. So as investors, you want to be able to look at these companies and know which are the ones that will do well and which are the ones that will do poorly. And so we have partnered with Willis Towers Watson's to create a series of methodologies to help investors capture this future performance in environment. And then the other one, maybe I can share, is a trend that we're seeing in Australia. So a lot of investors are very interested in the United Nations Sustainable Development Goals. But one challenge that has always faced investors is the lack of data, or maybe even the inconsistency of treatment of these companies. For example, a fertilizer company, even though it is a goal 2, working towards zero hunger, but fertilizer also emits a lot of greenhouse gases. So what happened is that we found 4 global asset owners, that is APG, PGGM, BCI, and Australian Super. They're all pensions in Dutch, in Netherlands, in Canada. They represent over $1 trillion in assets. They've actually come together to create a very unified structure to again make UN SDG an investable method. And it is one structure that is created by asset owners for investors globally. So when we see regulations working hand in hand, we see index providers going out, getting all these interesting, unique data sets, we are able to offer that kind of choice for you as an investor. But one trend that we are seeing is investors' appetite towards quantifying sustainable development goals, but also towards what climate change means in the future, not in the past, but in the future. Thank you.
Thank you, Charlene. As Charlene said, I observed that globally, I can see a lot of carbon-related product, and also the pact like Paris alignment, climate change related product, and in our case, it's like a headline-linked ESG product, like S&P 500 ESG. So, due to time of constraint of time, that I'd like to ask you guys, what would be like a promising product in ESG area for next 1 year? So each of you got the 1 or 2 minutes. From Mr. Kim that you said about the climate related product. Other than else, so would you?
네, 질문 감사드립니다. 저희
Thank you for the question. Besides climate change, well, ESG. Well, it's been mostly equity products, that was following ESG, but now ESG is applied more broadly, so it's become more pervasive. So ESG rating or carbon footprinting. Well, there are more than listed equities and fixed assets. It's the private equity, private debt, and private properties. So private related ESG products and services, I believe, will become more available in the market. And MSCI, we're working with the private equity and private debt and private real estate companies to provide carbon footprint services. We actually began this service in Q3 of this year, and many institutional investors have been showing interest. Thank you.
Can you hear? Jeremy?
Yes. So I have two ideas if I get permission. So the first idea, I think a long short ESG index will be very interesting. So historically, companies don't really get penalized that much when they're not performing well on the ESG front, right? So having a long short ESG index on equity actually will be quite interesting, so that the companies will actually have even more incentive to do a better job. Then the second idea that I have is a little bit more maybe long term. It's an ETP product, I would say, and it has to do with like crypto asset, right? So everybody knows like it takes a lot of energy to mine Bitcoin, and that's one of the drawbacks. So I believe there could be a concept where you create a green crypto asset, green Bitcoin product, where the Bitcoin is actually renewable energy. So those are my two ideas.
Interesting. What about the Ivan?
So I think we all agree on the importance of ESG and aspects of ESG like such as low carbon, climate, net zero, and whatnot as well. But whilst the growth has been primarily focused on the equity side, what we see is very exciting coming up would be actually ESG overlaid onto fixed income and alternative assets. So, fixed income is still relatively new in the ESG space. We are seeing a lot of inquiries coming through, not only from the issuers, but also from the asset owners across the globe, and also more specifically in the Asia region as well. And just to touch off what Jeremy mentioned as well, on the alternative asset space, FTSE Russell, we've just recently introduced our digital assets on the crypto front. And what we are also seeing is that, clients looking at a more defined aspect of getting exposure to be more eco-friendly and environmentally friendly. So what we have been doing at FTSE Russell is that we are able to overlay, a number of our ESG and SI methodologies across our digital asset index offering. So, I welcome anyone that wants to find out more. Please reach out to me. Thank you.
Okay, thank you. Interesting as well. Charlene, what about your view? So even though you a bit talked about the evolving the product, but
so one of the trends that we see are definitely assets going passive, from active to passive, particularly in the ESG space, because ESG can be a very personal view to each investors. And the last thing investors want is to risk having exposure of certain companies in their portfolio that they do not want to capture. The other thing also quite interesting is whether you are managing an ESG or non-ESG product, more and more there is at least a basic exclusion. For example, the UN Global Compact and all these basic exclusions that investors already do not want exposure into even their traditional portfolio. So these are the two trends that we're seeing in the market.
Yeah, I think we touch on various concepts, including even cryptocurrency, multi-asset, and long and short, and traditional way of excluding certain companies, things like that. I think around this time we want to have some questions from audience as well, because you provided a lot of information to the audience. 예, 혹시 질문 있으신 분?
So any questions from the audience? If you do, please raise your hand and we'll bring a microphone over to you.
Question from audience.
네, 안녕하세요. 신한자산운용의 박정호.
I am Park Jong-hwan from Shinhan Asset Management. So there are index providers and ESG data providers. For this session, it is all based on UNPRI, but by checking a lot of data, there is a different grades given to the same company, and different companies have different assessment methodology. For the user's point of view, maybe sometimes it can be of variation risk. So what's your take on this? And from the longer term perspective, what is your solution to this problem?
Did you get it, you guys? So can you somebody answer to the questions regarding the?
제가
Yeah.
네, 제가 답변을 좀 간단하게 드리겠습니다.
So let me answer this question. There may be different types of ESG evaluation methodology, but what we have to think about is that there's ESG standards, but which is separate from ESG grading. There are ESG standards. There's GRI, SASB, and some standards, or that can serve as standards for ESG. There's a maturity map and other important items identified for different industries. But when it comes to ESG ratings, maybe we have to look at it from a different perspective. ESG rating is a commercial service, like credit rating and the investment recommendation. It's an information that you need to consider for your information. For for-profit companies, we want to make sure that we respect their business, independent business, and we have to also acknowledge their ESG practices. But one thing that we have to think about ESG rating is that there may be two different types of ESG ratings. There may be best practices or social norms that are applied to rate the ESG practices. Otherwise, on the other hand, as is the practice of MSCI, there is other assessment methodology. So from the longer term perspective, if the ESG rating is high and you believe or expect that their corporate performance will be better. So it's an investment information, and I think its value is greater when it's considered as an investment information. So the interpretation of the ESG rating should be up to the interpretation and judgment of the individual investors. Thank you very much.
If we don't have any answers regarding the question, that we will stop here due to the interest of time. Then I think the audience can send email to you guys with some questions whenever you visit Korea. Then you can meet them. Thank you all of the participants and also audience. 감사합니다. Thank you.
Thank you.
Thank you very much. 고맙습니다. 네.
Yes, thank you. Mr. Kim Bum-seok, thank you. And the panel discussion, thank you so much for your panel discussion. I would also like to thank everyone for joining us for the panel discussion. We'll now take a 5-minute break and begin with the last session. And the last session will be dealing with active ETFs. And we're going to also think about or discuss the future of active ETF in the session following the break. Thank you.
네, 2021 글로벌 ETP 컨퍼런스 서울 어느덧
So we're now going to begin the last session of the 2021 Global ETP Conference. So I would like to thank everyone for staying with us till the until the last session. We're going to be discussing about the ETP evolution. We're going to be discussing about the future of ETP ecosystem. We have two presentations. And from SEC of the United States, we have Mr. Steve O, who is he is the Senior Policy Advisor of SEC. He's going to talk to us about the ETP regulatory updates. And Mr. Steve O has been participating as a speaker at our conference since 2018. He has been talking to us about the trend of ETP in the U.S. He has worked at NASDAQ, and since last year, he has moved to SEC as the Senior Policy Advisor. So he has a lot of knowledge about the ETP regulation and policies of the United States. He is connected online. So Mr. O.
Okay, thank you very much. So please begin your presentation.
Hello, my name is Steve O, Senior Policy Advisor in the Division of Trading and Markets at the U.S. Securities and Exchange Commission. I wanted to first thank the audience for making time to listen to my speech updating the U.S. ETF regulatory and market structure landscape. I also want to express my sincerest gratitude to KRX and its generous sponsors for graciously allowing me to once again speak at this esteemed conference. It is truly a great honor and pleasure to join you all again, even if it's virtual this year. I would like to begin with the standard disclaimer required of all SEC staff when speaking in a public forum. The Securities and Exchange Commission disclaims responsibility for any private publication or statement of any SEC employee. This speech expresses the author's views only and does not necessarily reflect those of the Commission, the commissioners, or other members of the staff. The US ETF market has continued to gather assets in 2021, eclipsing 6 trillion in assets under management and approaching 7 trillion over 2,500 ETFs. 2021 US ETF inflows shattered the previous annual record of $500 billion set in 2020 by the end of July this year. Global milestones were achieved in 2020 as well, with worldwide ETF AUM approaching the $10 trillion mark on record annual inflows. As the ETF industry continues to rapidly grow, while hitting new records and product types become increasingly complex, such as non and semi-transparent ETPs, as well as also ETPs with embedded derivatives holdings, regulation remains vigilant and continues to stay on top of these trends to protect investors and maintain public confidence in our capital markets. The ETF rule, 6C11 of the Investment Company Act, also known as the 40 Act. As a refresher, since the ETF rule was approved right before the last KRX conference in 2019 and discussed heavily then, the ETF rule basically covers both index-based and actively managed ETFs that disclose their portfolios daily. The rule also allows the use of custom baskets in exchange for creation units so that an ETF can use a non-representative selection of its portfolio to create and redeem ETF units. Use of custom baskets was previously limited to a small group of early ETF sponsors. The rule also provides a uniform framework for disclosures in portfolio holdings, premium discount levels, and average bid-ask spreads. New leverage and inverse ETFs are permitted within the rule. However, they are also subject to compliance with the new derivatives rule, which I will discuss shortly. What has developed in the meantime since the last global ETP conference is that new exchange listings rules were subsequently approved in April 2020 after collaborative efforts between the SEC and the ETF listings exchanges, which harmonized exchange listing standards with 6C11. This new set of exchange listings rules helped further simplify, clarify, and expedite new ETF issuance as a unique structure of an ETF as a tradable security, as well as an investment fund, required a longer and arduous approval process in the past from multiple divisions within the SEC. The savings in time and money for issuers, especially for newer and smaller ones without economies of scale, was expected to be significant. Since the approval of 6C11 in September 2019, there have been 82 new US ETF issuers, according to Deb Furr, who runs ETF research consultancy and data firm ETFGI. This represents a significant portion of the 208 total ETF issuers in the US market today. I'll continue now on to non-transparent active ETFs. The Commission approved the first set of exemptive orders in 2019 that permitted ETFs not disclosing daily holdings using different arbitrage mechanisms from 6C11 ETFs. This is another topic that was discussed in the last KRX Global ETP conference, but has developed since then. There were two models approved, which were Presidian ETFs, or active share ETFs, and proxy portfolio ETFs. To protect the identity and weightings of their portfolio holdings, the active shares ETFs would sell and redeem their shares in creation units to authorized participants only through an unaffiliated broker-dealer acting on an agency basis called an APR for AP representative. The APR would know, but keep confidential, the identity and weightings of the basket securities. Active shares ETFs would disseminate a verified intraday indicative value, or VIIV, reflecting the value of its portfolio holdings calculated every second during the trading day. In the proxy portfolio model, each day a fund would publish a basket of securities and cash that, while different from the fund's portfolio, is designed to closely track its daily performance. Commission amended relief within the last year to add basket flexibility through custom baskets. Current approval on both types of non-transparent ETF platforms generally allows for investments in US listed equities and exposures in the following: futures traded on US futures exchanges referencing assets in which the ETF could invest directly, as well as cash and cash equivalents. Both the Presidian and proxy portfolio relief have key investor protections, including enhanced risk disclosure, compliance with regulation, fair disclosure, and finally, remedial measures if the funds do not function as anticipated. The first ETFs using these models were launched on April of 2020, and today there are 35 ETFs across 7 issuers with $2.1 billion in combined assets under management. I'll now move on to mutual funds to ETF conversions. There have been several announced mutual fund to ETF conversions in 2021, and we continue to see lots of good engagement between staff and other ETF issuers. Conversions that have occurred so far have addressed challenges that involve direct mutual fund shareholders that do not have brokerage accounts and fractional shares of a mutual fund that is converting to an ETF. The ETF rule and its release address certain aspects of the conversion process where investors other than APs may transact in shares that are less than a creation unit. Rules and public SEC staff guidance relevant to certain aspects of a conversion should be consulted when planning a conversion. For example, like any reorganization, business combination, among other things to keep in mind, our fund managers and counsel should determine whether a shareholder vote is required and also must analyze 40 Act provisions on affiliated transactions. There are purported benefits in the eyes of fund managers of converting an existing mutual fund into an ETF versus creating a Me Too version, ETF version of an existing mutual fund. One of these is the economies of scale from existing assets in the fund. As for the topic of past performance, people should refer to the applicable rules, i.e. Rule 482 of the 33 Act, as well as guidance on prior performance representations for investment companies. Staff in the Division of Investment Management encourages you to reach out with questions. Derivatives Rule 18F4 of the Investment Company Act. The Derivatives Rule was approved in October 2020 and covers business development companies, closed-end funds, and open-end funds. Under the last category, most US listed ETFs fall. Under the rule, ETFs holding derivatives are required to have a written derivatives risk management program, a derivatives risk manager, and finally comply with a test based on value at risk, or VAR, unless they qualify as a limited derivatives user. The VAR test should be relative to an index meeting certain requirements, or the fund's own securities excluding derivatives, or an absolute VAR in certain cases. The limited derivatives user must instead adopt and implement written policies and procedures reasonably designed to manage the fund's derivatives risks. We have already seen ETFs launch subject to the requirements of both the derivatives rule and the ETF rule. On this slide, I wanted to end with several notable ETF market structure updates. The first is the LULD plan, or limit up, limit down. On May 31st, 2012, the SEC approved on a pilot basis a national market system plan known as the limit up, limit down, or LULD plan to address extraordinary market volatility and prevent trades in equities from occurring at unreasonable price levels. The plan is designed to prevent trades in NMS equities, which includes ETFs, from occurring outside specified price bands, which are set at a percentage level above and below the average reference price of a security over the preceding 5-minute period, with the percentage being determined by its designation as a Tier 1 or Tier 2 security. Recently, after many years of revisions and updates, the LULD plan was finally approved as a permanent rule and is continuously being evaluated for improvement. The ETF industry has been advocating for Tier 1 status, characterized by tighter LULD bands for all ETFs. Moving on to the ETF calculated closing price. The closing price for ETFs, like other listed equities, was traditionally based on the price of each trading day's closing auction on its official listings exchange. In the absence of a closing auction, the last traded round lot transaction was carried forward to represent the official daily closing price. This convention posed a problem for less actively traded ETFs, as the official price was often determined by trades taking place not in conjunction with each trading day's market close, as well as the striking of each fund's daily net asset value. When this occurred, it gave the perception that the ETF was not properly tracking the value of its underlying holdings as well as target index. Therefore, by 2020, all ETF listings exchanges adopted a procedure to use market quotes to calculate an alternative ETF official closing price if no closing auction in that ETF took place that day. Due to the arbitrage process, these market quotes were determined by the listings exchanges to better represent the fair value of a fund rather than a stale price. The ETF calculated closing price allowed less actively traded ETFs to reflect a better representation of tracking its NAV and index, and allowing ETF market maker inventory of shares to better reflect accurate valuation versus its hedged positions. Finally, the enhanced exchange market maker incentive program. As the ETF industry has grown, many ETFs currently don't trade actively on a daily basis, as I'd mentioned before. The hope from the issuers is that as the ETF continues to grow, it will attract more investors and lead to daily activity that attracts greater competition from market makers and other traders, which would lead to tighter spreads and greater liquidity. Less actively traded ETFs do not generate much revenue for market makers. In fact, trading some ETFs is a money-losing endeavor for market makers due to high inventory costs, as well as also capital constraints. Therefore, ETF listings exchanges have traditionally used enhanced transaction-based quoting incentives under market quality programs to encourage market maker participation. These programs are driven by the exchanges because Current US regulation prohibits direct payment by ETF issuers to market makers for quoting. The challenge has been that the incentives were always tied to transaction rebates, which are still dependent on trading activity. Within the last couple of years, ETF listings exchanges have attempted to address this issue by creating smarter incentive programs that are based on market quality quoting metrics versus actual transaction rebates. The goal being to align payments with quote quality in the markets independent of actual trading volume, in the hopes that incentivizing market makers for their efforts to provide better markets will lead to enhanced market quality. I wanted to make a final personal comment that I am proud and honored to be working for the US ETF regulator, the SEC, to give back to the industry that has given me so much opportunity and knowledge for over 20 years. I wanted to conclude this speech by once again saying thank you to the audience for sharing your valuable time, as well as to KRX and its sponsors for making a great event like this a reality during such challenging times. I hope to have shared educational and interesting updates in my speech. I wish everybody the best of luck and success heading into the end of the year and into 2020. 감사합니다. And if we have time for questions, I am happy to answer a few. However, due to the sensitive nature and timeliness of my work at the SEC, my apologies in advance if I am not able to answer all questions on certain topics. Thank you again.
Thank you very much. 고맙습니다. 저희가 시간 관계상
Well, in the interest of time, we will not be able to take questions for Mr. Oh.
이 정책
So there was a detailed presentation on the regulatory update. Once again, thank you very much for your presentation, Mr. Oh. Now, finally, the final presentation of today's conference. Now, we're going to listen to a presentation on the topic of new ETF that looks great in 2020. Representing Samsung Asset Management, which is operating Codex ETF products, we have Mr. Choi Chang-gyu, head of ETF consulting from Samsung Asset Management. Please welcome Mr. Choi with a big round of applause.
예, 안녕하십니까?
Morning. I'm Choi Chang-gyu, head of ETF consulting from Samsung Asset Management. I participated in this conference in 2017 as an analyst. And back then, I talked about the future of ETN. I'm here to talk about today the ETF. Maybe I'm probably one of the right persons to talk about this topic. Since we are going to have lunch after my talk, I'm going to quickly deliver my presentation. My presentation does not contain any distinctive content, but I'm going to talk about something that is of interest of the industrial representatives and what we need to be prepared for the upcoming 2022. Maybe we need to think about what happened in 2021 this year, and maybe the next year's trend will be global. And the other trends include, since we had presentations on the thematic products, instead of calling it thematic products, I'd like to call it mega trend. And I'd like to also talk a little bit about retail investors. And they're not just typical ordinary retail investors, but they're smart retail investors. And finally, I'd like to also talk about the private pension investment. So there will be global mega trends followed by small retail investors using their private pension accounts to invest in ETF. That's what happened in 2021. And based on the observations of this year, I'm going to talk about what might happen in 2022. I would like to first talk about Zamova's Reflex. He was a OB/GYN doctor in the 17th century, and they were wearing white gowns and all tainted with blood. And their gloves were also tainted with blood, and that's actually prone to causing infectious diseases. So he's the one who argued that we have to wash our hands before treating or diagnosing our patients, but that made him to be dispelled from his position in the hospital, and was able to work in the industry. The same for the ETF investments. There were a lot of investors who stuck to the wrong paradigm. However, we've seen a lot of changes in the paradigm. Now, there are people who are seeking ETF, investors who are seeking alpha return. I will also talk about active ETF, and the existing paradigm of ETF investment is also changing. I think that's what we are seeing in the industry. So I wanted to talk about the Zamova Reflex because I want to highlight that paradigm shift in the ETF investment. I want to speed up a little bit. So there were three keywords summarizing what happened in 2021. If you look at the diagrams, there were international products who took only small portion in the ETF market. Kospi Inverse, Kospi Leverage, and Kospi 200 were more popular. Global international ETF products were not the mainstream, but as of the end of October this year, the AUM of international products is 20% of the total AUM, and the stock market went up this morning and it stabilized. That means ETF is closely linked to the return, and when Korean market is weak, when it goes sideways, then there will be investment flowing into the global or international products. That means the proportion of the global or international products will continue to rise. As was mentioned by the representatives from the Morningstar, this is what we are looking at. There are listings based on VIX, and there are themes that reflects the themes or the trends. Who's going to win in the market? In 2021, AUM increase ETFs are China, EVs, US top 10, and the secondary battery cells. And they cannot be really categorized as sectors, but these are emerging themes. So we don't call them themes, we call them instead mega trends. So there are not a lot of activities to be called as a sector, but they are important trends that we have to pay attention to. I also briefly talked about the smart retail investor when I was working as an analyst. I often thought that we have to move the opposite direction of the retail investors. And those strategies are quite effective. So if we do the opposite of the retail investors, then we will be successful. Sometimes I do appear on YouTube channels, and with the YouTube channels now quite popular among Korean retail investors, has a lot of influence on investment decisions. And if you look at the ETFs purchased by retail investors, they perform also well, especially all the more so if it's international ETFs. I think it has a lot of implications. This year as well, retail investors, and next year it will continue to invest because the returns were really good. If you play a poker game, if you win a lot of money in the beginning, you get confident and you can bet more money into the game. So these smart retail investors will continue their smart investment in 2022. So this is the third trend that I'm observing. And I'd like to talk about the private pension. Recently, I moved from security companies to asset management company. ES or ELB may be an investment option, but sometimes I think about the investment savings account of the savings bank. But we have to think about the transaction fee, and the best alternative is investing in the private pension accounts investing into the ETF. So I briefly talked about the major trends of this year. Maybe what's going to happen next year will be based on what happened this year. And this year's trend may continue next year. So I'm going to talk about what might be promising in next year. First, I'd like to share with you my idea on the product structure. And there are two things that I would like to talk about in relation to the themes. And the next one is related to the institution or the regulation. It's been 5 months since I started working at the asset management company. So for me, I think I have a lot of homework that's given by the exchange because I have to make a presentation here today, but I did my best to prepare for today's presentation. This is the typical Etf Universe. Before, you had what's called the basic universe. If you need sectors, then you have gigs. If it's a market cap based, you filter by trading volume. That's what we used to do for the basic filtering, but a lot of things have changed. In the morning, I participate in another seminar, and there are a lot of metaverse related ETF products that are being talked about. And in this morning's seminar, we had discussions about, and we also received the question using what method I use the metaverse related ETF product. That means our investors are getting smarter. There are also AI based keyword related scoring. If a certain corporate report had specific keyword a number of times, and how many times this particular word is used in their annual report, those data is collected and analyzed to recommend any investment vehicles. And X factor is sometimes used to estimate the ESG rating. Sometimes value chain is understood and analyzed to score that particular listing. And there are a number of ETF methodology that are being generated and applied. So this is what I did. So I talked about the Zamova Reflex, and I talked about the existing ETF methodology which track the index to follow the beta. And I now realize I need to think about or find the evidence that the old paradigm is collapsing. Every month, trading volume, top 30 ETF PDF number of listings were averaged. Up until June 2019, the number of PDFs listings was 25. So KOSPI 200 were highly traded and KRS 300 ER ETF were traded the most. That means it is important for ETF to track the index. That means you have to have many components in the product. However, until October this year, the number of listings went down. And I briefly showed before, but in the ETF area, Tech Top 10, Pound Plus, or other compressed portfolio ETFs are getting a lot of attention from the retail investors. So this is an evidence that the market is changing. So we are seeking not just beta, but alpha. After my talk, we will have discussions on active ETF. Active ETFs are the ones that seek alpha return. So this is how the world is changing in the ETF universe. So for new ETF, optimization of portfolio will be really important. We will have compressed ETFs or ETFs with optimized or compressed portfolio. Maybe you believe that there are not significant number of holdings in the products. There will be different indexing methodology. Before, we had to have at least 10 equities and 10 bonds, or at least 10 holdings of each asset classes. But it is now changed into 10 securities. For equity, there is equity securities, and there are also profit securities. These are the terms used by the Capital Market Act. So now you may have ETF with 1 equity and 9 bonds. Now pension customers, if they want to only purchase Samsung Electronics, then we can recommend them to compose their portfolio of Samsung electronic securities and Samsung bonds. So they can create an ETF that is composed of only Samsung. Also, Tesla is really popular, and you can have one Tesla and one Apple. So you have only two holdings, and the remaining portfolio will be filled up by bonds. So I'm not sure whether it can be called as ETF or a basket. So that's what I believe that what's going to happen. But there's no or less difference between ETF and ETN. So this is my first idea for next year. The second and third ones are related to the themes. I said I want to use the term megatrend instead of themes. What will be the megatrend? Fortunately, nobody before me talked about Metaverse in today's conference, so I was quite relieved. Recently, Facebook changed its corporate name. It's called now Meta. There is a Fan Plus, which is Samsung's flagship product. Maybe instead of saying Mang Plus in Korean, which may mean we lose. I think my joke failed. Sorry for that. There is a Metaverse ETF, and its return is quite good. I'm not here to brag about the performance of the Meta ETF, but instead, I think Metaverse is a robot that can transform. Let's say there is a robot that's called Voltron. It consists of 5 different lions. For me, Metaverse is the robot. There are different components of Metaverse. It consists of contents, and there must be a platform, and there is also infrastructure. We are crazy about Metaverse because Metaverse offers a lot of contents for the end users. Of course, there's a lot of popularity of Korean content. There is popular Korean TV shows or the Netflix shows like DP and Squid Game. But in addition to those, we also have strong platforms which can realize the virtual reality. So platforms refer to the engines. I'm not sure whether you visited the online exhibitions of the conference, and those online exhibitions are virtual booths on the Metaverse platform. And we also have infrastructure of Metaverse, and that's 5G, 6G telecom, or cloud, and quantum computing, and they compose the infrastructure of Metaverse. So that can be regarded as sub-themes of the megatrend of Metaverse. There may be one content, one platform, and one infrastructure. So we could create a sub-themed ETF, and we combine those to create a Metaverse ETF. Likewise, another theme or the megatrend I want to highlight is that you may get disappointed because it's not original. Another megatrend I would like to highlight is what's called the clean economy. Of course, ESG is getting popular, but it could be ESG composite or it could be the ESG all separate. Instead of combining all ESG into ESG composite, we are more focused on E aspect of the ESG, and that's clean economy. There is a clean economy value chain that we want to create, and there is clean energy aspect, which is carbon economy, and there's also clean industry or green factories, and there's clean transportation. Recently, the northern route is opened, and now the northern route is being navigated or developed using the ice-breaking vessels. We don't want the icebreakers to emit harmful gases into the air, so we need to focus on clean transport and clean environment and clean agriculture. And those are the things could be developed as sub-themes to constitute what's called the clean economy ETF products. Lastly, I'd like to talk about tax loss harvesting. It's a service that's provided by robo-advisors. By 2023, we are going to have a new tax system which is called the financial investment income. The loss gains from securities transactions and the loss and gains from the bond transactions will all be netted to calculate the income tax. This is what's going to happen. Maybe it will be helpful for you to reduce tax instead of generating higher returns. I'm not sure whether this will be materialized or not. Let's say I have gains from my bond investment. Then for that customer, you make the customer to purchase a discount bond so that the customer can get gains next year, so that the gain that you can obtain can be deferred to next year.
그러면은 그
If you have profits from Samsung stocks, then exchange with Samsung futures.
2023년에 세법이 바뀌니까
With the changes of the relevant law, maybe we will have
생각을 하고 있습니다. 정리해서 말씀.
a lot of tax loss harvesting related practices happening. ETF, ETN, is it a listing or a sector? Maybe we will have less remarkable distinctions, and there will be sub-theme Metaverse and clean economy sub-themes.
형태의 ETP들이
And there will be also ETPs that will help you reduce tax. That's what I think is going to happen in 2022.
박수 부탁드리겠습니다.
Thank you very much for your presentation.
ETF 신상품
He has introduced us to new ETF products for 2021. And he also went over keywords. So in the interest of time, we'll just take one question from the audience for our speaker. Any questions? I think I've been perfect, so no questions. No, because the lecture was so good, there is no question. So the lecture was so precise and clear. There is no question to Mr. Che. And I also very much look forward to new products. Maybe Mr. Che said that we will have slimmer products and the robotics and metaverse based products. So it was an excellent opportunity for us to think about what the market is going to be like next year. We're in session 3, so we've listened to two presentations. We now have a panel discussion, and the conference is a most renowned international conference here in Korea when it comes to ETP, and we are celebrating 11th year, and we are receiving quite a bit of feedback from our participants who have joined us online. And I would also like to ask you to visit our homepage and take part in the events that we have prepared. And so please sign in your name online if you have taken part in the conference. And also please make time to visit a virtual exhibition halls of the participating companies. And we also provide coffee vouchers as well as hotel vouchers for those lucky ones participating in the conference. It seems that we're ready for the panel discussion. So we'll begin the panel discussion right away. Let me introduce our panel discussants. The theme of the panel discussion is the are active ETFs of the future of ETF. We have panel discussants from ETF managers. From Mr. Kyun Jun, Director, Derivative Strategist of Samsung Securities, serving as the moderator. We have Mr. Soo-Han Kim, Director from the Mirae Asset Global Investment, and Mr. Jung Sup Kim, the Director of the KB Asset Management. They have joined us here on stage. And from online, we have from BlackRock, Mr. Christian Opreist, and from Investco, we have Mr. Eric Polakov. So I will turn the microphone over to the moderator.
Hello, audience and attending. Let's begin last panel discussion. I'm Kyun Jun at Samsung Security, and I'm a moderator of this panel discussion. The subject of the last panel discussion is about the active ETF. As you know, the active ETF is the hottest topic in this day, and there are a lot of controversy with active ETF. Like, is it passive product, or is it against from transparency of ETF? So we expect that this panel discussion would be helpful for understanding the active ETF. We are ready to hear the valuable comment from distinguished panelists. KRX invited the famous leaders in the ETF industry in global and KRX Korea as panelists. Okay, panelists, please introduce yourself. First, Mr. Christian Orbist at BlackRock, please.
Yes, thank you very much. It's a pleasure to be here. My name is Christian Obrist. I've been working with BlackRock for the last 9 years, and I'm currently leading the distribution for iShares to institutional clients across Asia, ex-Japan. Thank you very much.
Thank you. Next, Mr. Eric Polakov at Investco.
Morning, good evening, good afternoon. My name is Eric Polakov. I'm the global head of our ETF capital markets team here at Invesco, based out of New York. Been in the ETF industry for over 20 years on both the trading side, the exchange side, and now on the issuer side. Looking forward to today's conversation.
Thank you, attending. KB자산의 금정석 본부장님.
예, 안녕하십니까.
Hello everyone, I'm Kim Jang-seop, Director from KB Asset Management. We have 84 ETF listings that we are trading. AUM is about 5.5 trillion won. Good to be part of this discussion.
Well, Mr. Kim Soo-han from Mirae Asset Global Investment. Good afternoon. My name is Soo-han Kim of the Tiger ETF of the Mirae Asset Global Investment. I'm responsible for marketing. If I may just introduce our company, Mirae Asset is operating about 90 trillion won worth of ETF in international countries. We have Tiger ETF, we have Global X in Hong Kong, and also Horizon ETF in Canada. So we are actually operating ETF 24 hours a day. So we are the only Korean company to do so.
The panel discussion will be 3 points. First is the background of growing the active ETF and the investor's response. Second is the argument about the structure of ETF, active ETF. And the final question is the future of the active ETF market. Actually, I ask your understanding for my bilingual speaking, because most of the audience and attendee are Korean. I will say Korean to local panelists and say English to BlackRock and Invesco. 그럼 첫 번째 토론자로 KB자산.
So first of all, I'd like to ask Mr. Kim Jung-seop from KB Asset Management ask this question. I'd like to ask you to talk about the background of Active ETF launched in Korea and the current size of Active ETF and the current lineup. And I would like to also ask you to talk about the Active ETF offered by KV Asset Management. There are two things that I would like to share with you. Active ETFs are really popular, and there are a lot of talking about the launch of Active ETF. I'd like to talk about the background. Before, ETF itself is a passive product, so we focus on beta in managing the product. But now we are also seeking alpha return, and there are a lot of strategies that also include active ETF. I'd like to talk about what it means. To talk about the background of the active ETF launched in Korea, unlike the passive ETF, I think it was around 2013 when people started to seek overperformance from ETF. It is called smart factor. There's momentum, global, and dividends. These are the known alpha sources, and it is now created into active ETFs. And that, however, this is different from what we call active ETFs now, because the underlying assets reflect the alpha and it still tracks the index. So it's between passive and active ETFs. But recently, the active ETF that we talk about nowadays is there were 7 bond ETFs launched in 2017, and that's the actual time when we start to see the real active ETFs. Of course, there was equity type first. The portfolio is disclosed on a daily basis, so the bond type is easy to disclose, and there are no legal issues. So it was right that time to have the bond ETFs first. And from the asset management company's point of view, active bond ETFs were quite convenient because bonds or fixed income products have different maturity in the same portfolio. So in order to replicating the or indexing is really difficult, and there are OTC trading, so it's perfect replication is not easy. So for the asset managers, for them, it was convenient for them to launch active bond ETF first. We started to see active equity ETF last year. As of end of active ETF, the total AUM is 4.1. There are 34 listings. That's 6% of the total ETF market. This is end of last year. Active ETF AUM was about 2 trillion, but year to date, it's already more than 4 trillion, so it's a twofold increase. I think the launch of active equity ETFs was really helpful. It indexes KOSPI 200 if we wanted to outperform, and there are 6 listings that seek overperformance of KOSPI 200, and there are 9 asset managers. There's a themed ETFs like mobility, renewable energy, and semiconductors. And there are the active ETFs of those themes. Of course, we started from active bond ETF, but what's leading the market is the active equity. And we have 9 APs and 9 asset managers. I expect there will be a lot of growth in the area of active equity ETF. So what it means, what this all means is that, what all of this means is that, of course, there is a transition from passive to active, but at the same time, I think the market participants and we have changes in the market participants, but there are also changes from the industry as well. Active ETF provides both opportunities and risks for the market participants. There are conventional active managers, and it may pose a lot of risk for their business. When it comes to the market entry, maybe they're forced to enter the active ETF market because when active managed time folio is quite strong and they're already in the market and active, and Shinyang Asset and Merits Asset Management, and these companies are already considering their entrance into the active ETF market. They are usually operators or managers of mutual funds. Active ETF changes the distribution of the product. Of course, whether it's active, whether it's passive, it's important, but active funds were purchased through other channels, but ETFs can be invested directly. The consumer may drive their car to buy things at Korean Walmart. That was the traditional mutual fund. But ETF is like ordering things from Coupang or the Korean Amazon and has the things delivered in front of their door next morning. So the investors who already have this experience will continue to have interest in this active ETF. So because of active ETF, there will be a lot of investors moving to the active ETFs. Asset managers who used to seek alpha returns will use the active ETF vehicles, and they may lose their dominance in the mutual fund market. So for the existing asset management companies, maybe the rise of active ETFs will pose a lot of risk. For the existing ETF companies, I think it will be a lot of opportunities for us because there are a lot of innovations taking place in different industries, and stock picking will be really important. And you have to, maybe active investing will be really useful because you cannot really select only the best of stocks. There are areas where passive products couldn't be launched, like asset allocation or the absolute profit, where you cannot really set the underlying assets or underlying indexes. And rebalancing is also really difficult. So in those areas, maybe we will be able to see active ETFs, or there will be a lot of tries to develop active ETFs for those areas. Now, lastly, let's talk about the investor's point of view. Maybe they will have more risk in product selection. In the past, selecting your index influence your future performance, but now you have another risk of having to choose your managers because depending on the management, the performance of your product will be different. So you need to pay a lot of money for information seeking. You need to invest more time. In the US, information on fund or the information on the ETFs are really, there are a lot of sources where you can get information. So you need to have a lot of contents which will help the investors to save their time in selecting their products. To summarize, the launch of active ETFs is not just another different styles of investment. It's going to cause a lot of changes in the traditional or conventional mutual fund transactions. Thank you very much. There was Mr. Kim Jong-seo from KB Asset Management. He talked about the history and background of Korean active ETF and different perspectives that we can have on the popularity of active ETFs.
Mr. Polakov, the presentation slide about active ETF. Why don't you show your presentation, please?
Sure. Thank you. So let me start here. with a little bit of history lesson for what we've done here in the United States. If we think about the mutual fund industry, it was born in the early 1900s in the United States, with the first mutual funds being listed in the 1920s. But we think about the growth for clients and their needs really kind of accelerated in the 1970s with index-based mutual funds that kind of came out from the likes of people like Vanguard and Fidelity and others out there. And what did it do? It really helped US investors kind of diversify and simplify, right? Instead of individual stock picking or bond picking, a mutual fund that offered a various portfolios to investors really helped kind of, help think about diversifying their risk for future investments. And then in the early 1990s, Canada listed the first exchange traded fund ever, technically. It had closed shortly thereafter, but in 1993, the first ETF index-based was born with SPY, which is now one of the largest ETFs in the world. And what did it really offer? It offered the same sort of benefits of diversification for US investors, but it also offered transparency, tax efficiency, and intraday trading. So being able to express a US investor's opinion anywhere from 9:30 a.m. Eastern until 4 p.m. Eastern. And then what we evolve into next? In 2008, the first active ETFs came to the US marketplace. And let's do a little quick history lesson. What happened in 2008? We had the global financial crisis that took down major banks and kind of forced the government to step in. But at the same time, active ETFs started just kind of coming to US investors' portfolios and access. And what is the transparent active ETF space look like now? It represents roughly between 4 and 5% of US assets in the United States, which isn't a lot, but it's becoming a much more actively kind of growth industry, and I'll show you that on the next slide. And then finally, not finally, but like what was the next iteration of active ETFs in the United States in April of 2020, again, during another kind of a harrowing time for investors in the United States and globally with the outbreak of COVID and the lockdowns and the government interventions, we had this new type of vehicle called an active semi-transparent ETF. And it's actually, it acts much like a mutual fund in terms of that it doesn't disclose its portfolios every single day, like an index-based product or a regular active-based ETF. But at the same time, it does offer a lot of the benefits that we just talked about, like intraday trading and tax efficiencies potentially as we grow this industry over time. So here you can see what I talked about from a growth rate perspective. So if we look from 2017 till earlier this year, the growth rates here of mutual funds and exchange traded funds, you can see that active ETFs outpace index-based or factor-based or even any of the type of mutual funds that are listed here in terms of just compounded annual growth rate. And I think that's an important kind of conversation that we're watching as well. What we're also seeing here in the United States is many mutual funds converting into an exchange traded fund on the active side. Now, those will be transparent for now, but there is opportunity for asset managers like us at Invesco or even folks like BlackRock to kind of make that transition from mutual funds to ETFs. So what's really different? And I'm not going to go through this slide or the next slide word for word, but what's really different is really sort of how the ETFs are created and redeemed by authorized participants. And I think effectively what's interesting about this semi-transparent is on every given day, and we run 4 of them currently, on every given day, we don't disclose the entire portfolio to investors. We show some of it, and the rest of it will be handled in cash transactions that when someone wants to create our ETF, cash and securities will come in and ETF shares will go out. And we will take that cash and buy the securities that the portfolio manager wants. So that's really the main difference. On a regular transparent ETF, securities come in exactly like they're prescribed, and ETF shares go back out on a creation, for example. And then finally, whoops, I think, sorry. What are we talking about? Active semi-transparents combine really sort of those qualities that we love about exchange traded funds, particularly for U.S. investors that can take advantage of many of the taxable consequences that or taxable benefits that ETFs can provide. But it also talks a lot about the benefits of diversification, which I briefly touched upon, intraday trading, which means that you can express your opinion any time of the day and not just at the end of the day for like a mutual fund. Active ETFs are, as we discussed throughout the day today, are trying to provide alpha, trying to outperform some type of benchmark. And I think that's an important kind of aspect of the active ETF wrapper. And then it also does kind of produce a little bit of the tax benefits that we talk about with exchange traded funds for US investors. So that's really where the industry is shifting towards. And right now, currently, since April of 2020, there are about $4.5 billion in about 40 products that are listed here in the United States. And it is a new innovation and a new way to kind of think about flows and returns and really keeping investors part of the portfolio that is looking to generate alpha on behalf of their goals. So that's really where we kind of stand here in the US right now.
Thanks, Mr. Polakov. It's a great presentation. I think Mr. Polakov summarized about the evolution of ETF and the structure of active semi-transparent ETF. He showed the benefit of active semi-transparent ETF. I really appreciate your presentation. 두 번째 주제로 넘어가도록 하겠습니다. 두 번째 주제는 이제 올해.
We will now move on to the second theme, which is about the investors' response to the active equity ETF. So we will hear from Mr. So-Han Kim, and we will also hear about the characteristics of the product as well. So investor feedback as well as the characteristics of active ETFs. So let me talk about the Korean active ETF and also what the market feedback was like as well as what the investor feedback was like. The Korean active ETF is about 4.1 trillion, which is 6% of the total ETF. And so there are about 34 active ETFs. 18 have been released this year. And so in terms of, so it's about and investor types for the equity ETF. They are mostly retail investors. For the fixed incomes, it's mostly institutional investors. And there are many different strategies for the active ETFs. The thematic active ETF was most popular here in Korea. And about changes that occur with the managers here in Korea. Well, active ETF here in Korea has just been launched. And so there are no leaders or followers. But with active ETF is clearly making changes in the ETF market. The passive ETF market, if a company is doing well, it's difficult for another company to get into the market. But I think it's different for the active ETF. If you have a differentiated product and strategy, well, it is easier. It is easy for the companies or the managers to get into the company. With Timfolio, it's a very famous hedge fund manager in Korea. But when it comes to ETF, the company is relatively new. And portfolio has been focusing on active ETF from the very beginning, and it's a company that is assessed to show new possibilities with the active ETFs. And so other companies have seen what the time portfolio has done in the market and has been following time portfolio and getting into the active ETF market. And there are some products that have been very popular with the retail investors. Timefolio had the BBIZ active ETF, and this was a BBIG passive ETF was launched last year and was quite popular. And BBIG active, well, requires capabilities of the managers and would like to seek alpha compared to the benchmark. And so it's an excellent case of success in the active ETF market in Korea. And then the existing products were, for instance, focused on the automotive sector. And so active ETF would include various automotive companies besides the traditional automotive OEMs to include like the EVs and others. So there are a few of these active ETFs that are quite popular. And so these are ETFs that have been able to overcome the limitations of passive ETFs. And then there's also Metaverse, which is very, very popular. We have both passive and active ETFs listed. And in less than a month, the volume has reached about 300 billion Korean won. And for investors' point of view, they provide quite large options or choices. A Korean ETF was able to grow very quickly in a very short period of time. And because of that, there are some things that need to be improved. Over international equity active ETF, there's only one, Tiger, BBIG. International ETFs, because of the time difference, because of different currencies, and also limitation in terms of providing the quotes, it's difficult to make them into products. But given our experience, well, these international equity ETFs actually produce more profits, and also Korean managers, I believe, have the capability to manage international equity ETFs. So I think that Korean managers should introduce more of these international equity ETFs.
The ETF provider in the world. Mr. Obrist, I have a question. What are the driving factors of growing active ETF in developed market? Could you explain the reason of investing the active ETF in US? And previously, Mr. Polakov suggested the benefit of active semi-transparent ETF structure. What do you think about it, please?
Yeah, thank you very much, and good morning to everybody, or good afternoon respectively now. And thank you to Eric Polakov. That was a nice history lesson in ETFs and how it has developed and evolved. I think if we just, again, take a step back and when we think of what has really, been the fundamental factors of why ETFs have been successful, there are really two, and they have been talked about, and it's really transparency, and also, at least for the US ETFs, it's also around the tax efficiency through the in-kind creation and redemption mechanism that exists. Now, that is not true for other jurisdictions, but what is interesting as well is as ETFs have grown, we have, first of all, we have seen a departure of the discourse around active versus passive. So just the way investors are thinking about the way they build portfolios, and it's much more a discussion around active and passive, and I would even say it's that we now classify that as active and index. And so when you think about how an investor builds a portfolio today, it's often around asset allocation, and therefore ETFs have become tools within a portfolio to build portfolios. Now, the products themselves have also gone through an evolution, and certainly a lot of the providers, including BlackRock, have gone through that evolution. We offer mostly index-based products, but we also offer active ETFs based out of the US. However, what we are sticking true to is the transparency element. Now, that is not to say that in the future that this may not be possible. And I think what we're really seeing is the development of the ecosystem. But I think for us, that is incredibly important, that there is a healthy discussion from the product providers, with the regulators, and with other stakeholders in the broader ecosystem around making sure that the process to manage the funds, to trade the funds, is extremely robust. So I think, one of the examples I can give you is if we look at the Australian market, which is within the APAC region, has become a little bit of a leader in terms of active ETF issuance, but it's gone through various stages of evolution where initially there was an internal market-making model which was approved, and this essentially meant that the product provider is also setting the price to trade the respective ETF with very little disclosure around the daily holdings. So there was a review of that. It's since been changed, and they've come back to the market with a better developed system around product disclosure. And I think that's what we've seen in the US as well. We obviously have transparent, we have semi-transparent, and there's what we call the ANT products, the active non-transparent. But as Mr. Polakov also outlined, the SEC recently approved, I think it's 5 different models around semi-transparent. And these vary. Some are still based on daily disclosure, but not to the public. You have models that use portfolio proxies. You have other models that have daily disclosure, but not the weights. So there are many different ways you can do this. And I think to the investor, it is very important to understand the process. Now, of course, the more complex the process gets, the harder it is to understand. And that's where I think the fiduciary element also comes into play, where we need to think about who are the clients. Now, broadly speaking, for index-based ETFs, it depends a little bit region by region, but by and large, you can still say it's mainly institutional customers. There's also a lot of wealth clients, but if we think about Europe or maybe Asia Pacific, I would classify that as institutional wealth. Maybe in the United States and some other countries like Australia, there's a bigger retail bid for ETFs. But certainly, also driven by, I think, by COVID, we've seen an incredible uptake of ETFs by deep retail investors. And so I think the onus on all participants in the ecosystem, including, again, the product providers, is there to make sure the process is robust, that transparency is also held up in high regard. And I think one of the things I was going to say is that while we have seen the growth of the semi-transparent, we're also seeing a lot of product issuance in the transparent ETFs. So I think there's more and more active ETF product providers who feel more comfortable to take the same strategy, or maybe a slightly varied strategy from their flagship strategies, and bring them to the market. Obviously, it is a different distribution mechanism, but I don't think that everyone sees this as cannibalizing their products. But I might stop there. Thank you.
Yeah, thank you. Great. Mr. Obrist emphasized the transparency of ETF, and the investor should know the underlying of ETF and the strategy. That's a useful point. Okay, move on. Last question. I want to ask you the future of the active ETF to all panelists. we should pick up the promising product in next year. Could you say the outlook of the active ETF market in 3 or 5 next years? Is it possible that active ETF will be the mainstream in ETF industry? First, investor, please. Yes, thank. Mr. Polapok.
Yes. So I'll talk about the U.S. specifically because it's while I'm a global head, I focus a lot of our efforts on the U.S. If we think about how mutual funds are sold, there is a distinct fee that gets associated that can actually be different for investors, right? So meaning that one firm can sell my mutual funds and get compensated one way, and another firm can sell my mutual funds and get compensated differently. With ETFs, you don't have that in the United States. So what I do think is going to happen, and we've already seen this with firms like Dimensional Fund Advisors, JP Morgan, for example, is that they're going to take existing mutual fund wrappers and convert them to exchange traded funds. And for all the things I talked about at the very, at my presentation around things like tax efficiency, intraday tradability, transparency, et cetera. So if I'm a betting man, and I am, I think that the growth of assets in the United States will come from many areas, but I do believe that active ETFs will be one of the leaders. And I showed you that graph on the compounded annual growth rates. And I think a lot of that will be not only from the bespoke brand new strategies that we've seen come to the marketplace over the last decade, but I do believe that active mutual funds will finally convert some of their assets to the exchange traded product wrapper and kind of take benefits of that type of technology.
Okay, thank you. Next, 김수환 본부장님.
예, 2022년은
Well, in 2020, there will be many more diverse types of ETFs in the market. And Tiger ETF is also preparing diverse ETF products. So the changes in the mega trends in demographics and the technologies, we are trying to incorporate. We're going to incorporate them in our products. Metaverse and EV. Well, we only have Korean domestic active ETFs, but we would like to introduce international Metaverse and EV active equities. And also related to environment. People are very much interested in climate change and environment. And so we will also be introducing ETFs related to infrastructure and environment, and also related to pension. So there's about 2 trillion. From 2 trillion to now about 5.5 trillion won ETFs owned by the pension funds in Korea. So that's a dramatic increase. And so we are preparing not just active ETFs, but also passive ETFs and the multi-asset, as well as mixed ETFs, a mixed class, that is ETFs. So we're preparing all of them for the pension funds. And also mid to long term perspective, we think that active ETF is going to be replacing the stocks, that is ordinary stocks. Well, the shares, the stocks, they have not been able to produce the results as anticipated. And as for the alternative investment or the hedge fund, there are regulations that we stop us from issuing ETFs on alternative investment or the hedge fund, but we will be able to issue other diverse types of ETFs. As investors learn about the transparency and efficiency of the ETFs, the investors, instead of direct investment, will be choosing ETFs.
Mr. Obrist.
So I think it's a very interesting in the evolution of ETFs where we stand now. I think if you ask me, will active ETFs be dominant in 5 years? I think it depends, in what sense you mean that in terms of assets. I don't think so, just because index ETFs are still growing at an unbelievable clip. And don't forget, there's trillions of dollars in this industry. But are we going to see a lot more issuance in active ETFs? Absolutely, because again, everyone's recognized the ETF, is not just a wrapper for index; it can be a wrapper of all things. And to my former comments around the ecosystem evolving, becoming more investor friendly, I think these are all things that are going to help. So I do expect to see a lot more product coming to the market. Currently, certainly in the Asia Pacific region, again, to some of the comments made before around distribution incentives, I don't think we'll see a huge amount of issuance, with the exception of maybe Australia, where trailer fees or retrocessions have been banned. But there's a strong retail bid for these products, so we will see that. At the moment, it's mainly around thematics. I think sustainability is going to be another area where we're going to see a lot of products come to the market as well. So it's it also depends on the exposure. There are many exposures that can benefit from that added flexibility, or managers with strong brand names in the retail space that can duplicate their flagship strategies and extend that distribution. So a very interesting time. I think we should all stay tuned.
Yeah, thank you. 다음은 금정석 본부장님 말씀 부탁드리겠습니다.
So Mr. Kim, so what's going to happen in the next 3 to 5 years with active ETF? Is it going to be the future of ETF? Of course, we cannot say for sure, but as was mentioned by Mr. Stevo from SEC, and also mentioned by Polakov from Invesco, TFA, the Dimensional Fund Advisor, and it was created by Nobel Economic Laureates, and they really focused on passive management. But TFA changes their passive products or converted their products into active ETF. And now they are among top 10, and they surpassed ARK Investment. Why DFA entered the ETF market, including active ETF market? JP Morgan and other existing mutual funds are now converting their products into ETFs, and I'm not sure whether active ETF will be the future of ETFs, but the active ETF as a vehicle will be a significant catalyst for the future industry change. Of course, there are new products being developed. There is active bond ETF, and there are no international active bond ETFs. We have a local lineup, and we are planning to list international active bond ETFs from next year. There are about 5 to 6 candidates in Korea, and we will select the components that will be really useful for the active management. There are a lot of retail investors who are interested in global stocks, and it's something that retail investors have hard time in stock picking, and we do not have a lot of product offerings as of now, but there are some managers that use proxy hedging technique and there are overseas market makers entering the Korean market, and there are technologies developing. So we are also closely following the current practices. So whether it's equity or bond, active ETF market will continue to grow. And from the industry point of view, as was mentioned by the representative from the CARE-X, the correlation coefficient of 0.7 will be lowered, hopefully. And I also hope that as part of the Capital Markets Act, the active ETFs has to meet the requirement of the correlation coefficient of 0.7 because it is supposed to track the index. But I hope that the requirement will be relaxed so that there will be various type of new products, including the semi-transparent ETFs. I hope that there will be further improvements of the related institutions. Then it will help further grow the active ETF market. So to summarize, active ETF maybe will be able to widen the spectrum of the ETF, and it will be really attractive for the alpha-seeking investors. Thank you very much for your participation. And Mr. Orbis and Polakov, thank you very much for joining us live. Of course, we are way behind our schedule, but if there's any question from the floor, we will take one question from the audience. In the interest of time, so we will not take any questions.
Great panel discussion. Please big hand to panels. 큰 박수 부탁드리겠습니다.
네.
Thank you very much. We had in-depth discussions about the future of active ETFs. Thank you very much, Mr. Chun Gyu, for moderating the session. I'd like to also thank the panel discussants for their kind contribution to today's conference. So we invited the experts and opinion leaders of the ETPs, and we had discussions on the ETPs and the future of the product. Now, the Global ETP Conference Seoul 2021 is about to close. I hope that the discussions will be useful for the further advancement of the global ETP product and help further develop the Korean market. Once again, I would like to thank everyone for their kind participation. Hope that we will be able to meet you next year again in person. Thank you very much.